Ah, fuck. What's good, baby? What's good? What's good? What's good? We got a very special stream. We got a holiday stream. Look, man, not everyone streams on the fucking holidays. That's what I do. That's what I do. I'm a holiday streamer. We got the green overlay. I'm not sure if you can see it, but we got a green overlay. Shout out to Luke. Shout out to Luke, man. What's good? What's good? What's good? What's good? What's good, baby? Happy. Look, I'm fucking greened out. I'm all green everything. I got a fucking. I'm all green everything, man. Come on. I'm all green everything, baby. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. My money green. My drink green. Everything green. You like the shirt? The Supreme sweater. It's some rare. Yeah. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Welcome back to the stream. How are y'all, man? It's so good to be here. It's a Tuesday. Feels like a Friday, but it's not. I changed the lighting, bro. Somebody replied to one of my posts and said I'm aging like Tony Soprano. And I was like, damn. All right. So I got here and started fucking with the lighting, and so this is what I've come up with. This is where I'm at right now. So I don't know if it's better or worse or exactly what it is, but I asked Claude, I said, is that a compliment? And it was like, nah. It's not a compliment at all. It's definitely not a compliment. So I got here, I started fucking with the lighting. So Malcolm, I'm sorry. But yeah, I fuck with your lighting. Welcome back, baby. Let's start it off with a roll call. Roll call, baby. Roll call, roll call, roll call. G-Man, Jeebus, Yonan, DM Max, Small Pepe, Viblet, Caleb, Kevin, Jack, Seth, Hidden Character, what's good? Darth Yoda, what's good? Small Pepe, J-Dogs, what's good? Pipe Bomb 33, my favorite name. Kira, what's good? Shifty, Cold Money, Caleb, Charlie, P 360. First chatter, no way. What's good, Toll? Alex, what's good? Poca, what's good? Marcus, Live, Bloom, Jackson, Ray, House, Goblin, Adam, Yonan, Wavy. First chatter again, T-Bench. Where y'all coming from? Where y'all coming from? First chatters, where y'all first. Oh my god. Oh my god. Alex Hayes, what's good? Privacy isn't dead, what's good? Clowy, what's good? First chat. Where y'all coming from? What's good? Y'all from the YouTube chat? What's good? Smiley Capital with the 20 gifted. Shout out Smiley Capital with the 20 gifted. Well, okay, what's up, man? People just happy today? What's going on? It's holiday? Where'd y'all come from? Oil must be going up if Smiley is gifted. What's good? Smart Doug with the first chatter as well. God damn. God damn. Wow. Y'all came from TikTok, YouTube Shorts? Like, what's up? Where y'all at? Where are you all at, man? Welcome, 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 welcome. Look, we have a lot to talk about today. Tulip King, what's up, brother? That oil trade paying off in viewership. Man, it fucking should, by the way. I approved it. I approved it. I approved it. You donate 20 subs, you could say whatever you want in the fucking chat. Straight up. 20 subs is like your barometer for I approve everything. So, welcome back. Welcome back. I just want to call this out because I'm not legally allowed to watch it on stream. My handler said no, but there's a new Jang video called Epstein's World. And there's a second one about how Jared Kushner is the new Epstein. And I'm not allowed to. My handlers, specifically DNAP, told me you're not watching it. I was told I'm not allowed to watch it on stream, so I'll just read you the titles. Is what we'll do. I watched it on my own time, and it was like, it wasn't that good. I'm going to be honest, guys. When I was early in my geopolitical career, and I started watching Professor Jang, I was mesmerized. And as time has gone on, as the weeks have passed, and we have begun to understood these markets, I watch these Professor Jang videos as a seasoned veteran in the geopolitical world, and I think to myself, he might just be a little bit retarded, bro. Like, Unc might have just lost it. I'm not going to lie, bro. I'm not going to lie. So, we're probably done with the Jang videos for a while, unless you want to come on stream. I mean, yeah. He's, like, Unc cool. He's just a little bit nuts. You feel me? So, I felt like he was really sharp until he started talking about markets. And so it's like what he understand. I don't know. But he's yeah, weird spot. So be honest, you don't think he's teaching kids or no? Like you think there's high schoolers in that classroom or no? You think he's solo? Be honest. Do you think he's solo in that room? He's solo. I've never heard anyone ask a question, cut him off, challenge him, nothing. I've never heard anything. So that's, you remember when Elon was caught with somebody running his what was that game called? Not Elden Ring. It was Diablo account, and everyone had this like crazy crash out freak out. Capital Flows, what's good? Everyone had this crazy crash out freak out when he was boosting his Diablo account. Not because it's bad or wrong, but it's just morally, it's just like, what? It's like a very weird thing to do. I don't know. It's just a weird spot. Like, okay, what do y'all think about frauding on your height? Be honest. What do y'all think about? We do need to know the Capital Flows interview. We were gonna do one a couple weeks ago. I think we were both like had conflicts. We'll run it back. We'll definitely run it back. Now that we're macro guys, what do y'all think about frauding on insoles? Like, if I'm jocking like 2 inches on my shoes, what do y'all think about that? Is that wrong, or is that game is game? Is that using what is at your disposal to win? It's an interesting discussion. I don't really know. Be confident in yourself. Guy who's 5'8" talking about be confident in yourself. It's like, no, I'm just trolling. All right, look, we got a bunch to talk about. We got a lot to get into today. I already did roll call, I think. Yeah, I did do roll call. Okay, here's how we're gonna start the stream. I have a Bitwise video. It's gonna set the tone a little bit. Yeah, 5'8" guys is be confident. All right, bro. Train out and took movie. Bitwise posted this and said, what? It's pretty funny. Takes 60 seconds to watch this graphic from Bitwise. Then he goes, the audio is not from Bitwise. Oh, it's pretty good. The audio is not from Bitwise. Here's Bitcoin right now, 74.5. And yeah, is the entire bid just Michael Saylor doing bag and slamming market buys on BTC? Maybe. But is Stretch making and raising like 9 figures a day to buy BTC priced in? Maybe not. We're going to watch this in a little bit. We have a Taiki video. Taiki's bull posting, which is rare. It's been a while since I've seen this out of Mr. Taiki. It's been a while since I've seen this out of Taiki. But most important charts in crypto right now, BTC looks good and Hyperliquid just looks. Chat, what do we say about this? No such thing as a what? No such thing as a what? Quadruple top. Never heard of it. Doesn't exist. Isn't real. We will skip over the Cash Patel wearing Nike ID SBs because I don't want to waste too much time on it. And really quick, last culture thing I want to say, then we'll actually talk about crypto, is March Madness starts in what? Like I think today are the play-in games. There's play-ins today. There's play-ins tomorrow, and then we really start on Thursday, Friday, Saturday, Sunday. There's some games in Buffalo, and I was thinking I was gonna go. Then I didn't realize Buffalo's a 7-hour drive from where I live. It is heinous. It's a 7-hour drive from where I live, so I'm not gonna go to any games. But while I do think sports betting has done irreversible damage to the younger generation, and all of these people should be trading crypto, trading macro, trading markets, doing anything other than sports betting, I am so fucking excited to gamble on sports teams that I've never watched over the next 2 to 3 weeks. I am like ecstatic about this. Like I'm so excited. I have a homie, one of my best friends growing up, who at this point I don't see him ever. I talk to him once a year, and he just got his annual call, and I said, "Buddy, you got the locks?" He said, "Of course I got the locks." And he's sending me just like lists of like parlays and like overs and Texas over. I don't know who's gonna win, but take the over, and like under on fucking VCU, BY. Just sends me the whole fucking locks. And it's the one time a year, not NFL playoffs, not NBA playoffs. March Madness is the one time a year, while being a like crippling sports gambling addict that's never made money gambling on sports, has some riz. It's the one time a year where if you know the 7th leading scorer on Hofstra by name and where you went to high school, you're getting laid, bro. Like it's the method, bro. If you have obscure polls on Virginia Commonwealth's like backup center, you're cracking, bro. Like it unpatched method, the college basketball method. So I'm excited. Maybe I don't know how many sports people are in here, but I'm thinking like maybe we'll do a bracket on stream tomorrow, maybe. I haven't done one yet, and I have to enter in a bunch of these tournaments, these little competitions. So maybe at the end of a stream, we can do one. Maybe tomorrow, we could probably do one. We could probably do one tomorrow, and we'll see. So I'm excited to do March Madness. Now, look, I'm just going to say this and we'll move on. I have met people that have made it in meme coins. I've met people that have made it trading options. I've met people that have made it trading good coins on chain. I've met people that have made it trading macro crypto. I've met people that have made it trading stocks, trading sports cards, trading sneakers. I've met people that have made it trading commodities, oil, trading prediction markets on war. I've met people that have made it trading every single asset class in the entire world. I've never met someone that's made it sports betting, ever. I've never met someone that's made it sports betting. But this is the one time a year it's allowed. It just is. This is the one time a year you're like allowed to do it. So, all right, that is what that is. Let's get into it. We have about an hour until Fade Out comes, and I think I want to start with war updates, and then we're going to go backwards, okay? So here's where we're at right now. Guys, I'm just going to be honest. There's been zero good news that have come out of the Middle East in the last, since this thing has started. There's been zero positive headlines that have come out of the Middle East with Iran versus US/Israel. And I know I sold oil, and I know I spent 3 days talking about why I sold. And I know that I entered a small position with high leverage. And so it's like a little bit annoying for me to come here and like bull post oil again. But man, I have yet to see a positive de-escalating headline since this entire thing has gone down. It pumped as soon as you sold. No, it hasn't. So here's the latest news. Joe Kent, okay, who is the director of the National Counterterrorism Center, stepped down today. and it seems rather significant. Here's crude, just so we're on the same page here. Also, if you're watching on YouTube or Twitter and you like to chat, twitch.tv/threadguy. It's the only place I read chat. Here's crude on Hyperliquid at 95, and then Brent is at 99.6. Our self-determined Trump line in the sand on oil is 100 Brent. And so we'll see how this plays out. But man, it just looks like it doesn't fucking want to go down. Here's his announcement. President Trump. After much reflection, I have decided to resign from my position as director of the National Counterterrorism Center effective today. This was this morning, I believe, this morning. I cannot, in good conscience, support the ongoing war in Iran. Iran posed no imminent threat to our nation, and it is clear that we started this war due to pressure from Israel and its powerful American lobby. Kind of a crazy post. I support the values and the foreign policies that you campaigned on in 2016, 2020, 2024, which you enacted in your first term. Until June of 2025, you understood that the wars in the Middle East were a trap that robbed America of the precious lives of our patriots and depleted the wealth and prosperity of our nation. In your first administration, you understood better than any modern president how to decisively apply military power without getting us drawn into never-ending wars. You demonstrated this by killing Qasem Soleimani and defeating ISIS. Early in this administration, high-ranking Israeli officials and influential, if I botched that, by the way, sorry, I probably, Kyle Salami, sorry, I botched it crazy, my bad. Soleimani. Early in this administration, high-ranking Israeli officials and influential members of the American media deployed a misinformation campaign that wholly undermined your America First platform and sowed pro-war sentiments to encourage a war with Iran. This echo chamber was used to deceive you into believing that Iran posed an imminent threat to the United States and that you should strike now. There was a clear path to a swift victory. Who was he talking about? This was a lie, and is the same tactics the Israelis used to draw us into the disastrous Iraq war that cost our nation the lives of thousands of our best men and women. We cannot make the same mistake again. As a veteran who deployed to combat 11 times, and a Gold Star husband who lost my beloved wife, Shannon, in a war manufactured by Israel, rest in peace, I cannot support sending the next generation off to fight and die in a war that serves no benefit to the American people nor justifies the cost of American lives. I pray that you will reflect upon what we are doing in Iran and who we are doing it for. The time for bold action is now. You can reverse course and chart a new path for our nation, or you can allow us to slip further toward decline and chaos. You hold the cards. It was an honor to serve in your administration and to serve our great nation. Joseph Kent, Director of the National Counterterrorism Center. Bruh. What exactly does he do? Director of National Counterterrorism Center. What does Director of National? I guess it's kind of self-explanatory, right? Leads U.S. efforts to analyze, integrate, and plan against terrorist threats. Dude, leads. Also, I thought that was crude. Oh my God, I almost had a heart attack. Leads, bro. And so he basically came out and said, one, Iran posed no threat to America. Two, I supported your efforts before completely and thought you were right before. 3, back in the day, your admin understood more than any modern president how to decisively apply military power without getting drawn into never-ending wars. 4, you were psyoped into believing that we should get into a war with Iran. Crazy. That's a mask-off comment. He basically said you were psyoped into believing that we should get into this war when deep down you know we shouldn't. That was a lie, he says. And then he says, as a veteran who deployed to combat 11 times and as a Gold Star husband who lost my beloved wife Shannon in a war manufactured by Israel, I cannot support sending the next generation off to fight and die in a war that serves no benefit to the American people nor justifies the cost of American lives. Crazy post. And so he basically comes out, says this is a disaster. Trump was psyoped. He has no idea what he's doing or why we're fighting this war, and that many Americans are going to die in this war for no apparent reason. And I don't know. I feel like he's alluding, especially with the timing of this, to ground troops in Iran. Right? To me, that's what this means. That means ground troops in Iran is coming, and he knows it's coming, and he wants no part of it, and he doesn't want his face on it. And so he said, fuck that, I'm out. What's the poly market? U.S. forces enter Iran. 62%. It's about flat right now. It's about flat. And so immediately after, Trump comes out and says, basically he says it's a good thing he's out because he said Iran was not a threat. There's another clip, actually. Let's see. Trump resignation. Let me see if I can find this other clip. Let's see. Here, watch this. And then watch. So Trump responds, says this.
I always thought he was a nice guy, but I always thought he was weak on security, very weak on security. I didn't know him well, but I thought he seemed like a pretty nice guy. But when I read his statement, I realized that it's a good thing that he's out, because he said that Iran was not a threat. Iran was a threat. Every country realized what a threat Iran was. The question is whether or not they wanted to do something about it. Well, I read his statement.
So Trump basically says he was weak. Good thing he's out, which seemed fine until I clicked on the Twitter profile of Joe Kent and read his pinned tweet, which is from February 3rd, 2025. Donald Trump. It is my pleasure to nominate Joe Kent as the director of the National Counterterrorism Center. As a soldier, Green Beret, and CIA officer, Joe has hunted down terrorists and criminals his entire adult life. Above all, Joe knows the terrible cost of terrorism, losing his wonderful wife, Shannon, a great American hero, rest in peace, who was killed in the fight against ISIS. Joe continues to honor her legacy by staying in the fight. Joe will help keep America safe by eradicating all terrorism. Congratulations, Joe. Bro, he appointed him. He nominated him. Trump hand-selected this guy to run this division. Hand-selected him. What is it? Beret? That's what I said. That's what I said. Green Beret. He hand-selected this guy to run this division. The guy comes out and basically says, hey, you know, like a whistleblower, but he's like, hey, this Iran war is a fucking disaster. And I'm out. And Trump is like, it's a good thing he was out. I never really knew the guy. I never really liked the guy. I never really trusted him. And this guy's pinned tweet on Twitter is Trump nominating him for this role. And so I sit here and I look at this chart. Let's go hourly on this crude oil chart. And I cannot help but feel that basically under no circumstances will I sell the small long that I re-entered. Small size, high leverage. If I get stopped, it means the war is over. And if I don't, it means I do really well. But every headline that comes out to me is terrible. It just is terrible. It's terrible. And you cannot convince me that this guy stepping down is like bullish for the war ending. High leverage as in 10x? No, like 5x. I think 5x on like a fourth of my profit or something like this. 5x on a fourth of my profit. No, I'm not a leverage guy. I don't like to lose money. That's the thing. I don't like to lose money. Everyone wants to like glorify 20x leverage. You're not making money in 20x leverage. This is the thing. A trade like this, I said this before when I was justifying why I use 2x. A trade like oil, bro, against you're PvPing the United States government, you're gonna get wicked up and down nonstop. Like this isn't like a Sailor BTC breakout. It's like, no, bro, you're gonna get fucking whipsawed back and forth nonstop. And so I'm not a high leverage guy. I don't think many people make money with high leverage because you can't sit. The problem with high leverage, you can't sit in it, bro. You can't sit in it. Like you're not. That's why I originally went back to 2x. I wasn't gonna make it through. I just was not gonna make it. And so a few more like war update clips, and then we're not gonna actually spend that much time on it today, except when Fade Out comes on, we will. Can you call me an idiot for putting another XP? I can call you a retard. Yeah, that's even worse. XPL, dude, give me a break. We're not doing. I don't want to hear a single word about XPL until BTC is over 80K. Like I just don't want to hear it. I don't want to hear about it. You can't. It's like let it at least, dude. Bitcoin had one green day, and my entire timeline is like tweeting about Farcoin, and I'm like, bro, like please. Guys, please. This is Kevin Hassett, who was like the runner-up for the Fed chair, who, by the way, I mean this with all due respect. I mean this strategically, because you know how Trump only elects guys that like look the part? I think I lost 10K betting on Hassett to win the Fed chair nomination on Polymarket. I wouldn't have bet on him if I had like done any research whatsoever. Kevin Warsh looks like the Fed chair. Like, I mean this so respectfully, by the way. Like, I don't mean this in a bad way. Kevin Warsh looks like the Fed chair. Okay? He does. Pete Hegseth looks like the Secretary of War. He does. Jerome Powell looks like the current Fed chair. Like, he just does. Hassett doesn't. But this clip came out. It's getting clowned. Let's watch it.
But the fact is that the U.S. economy is fundamentally sound, and that if it were to be extended, it wouldn't really disrupt the U.S. economy very much at all.
How does that work? How would an extended war not disrupt the U.S. economy? It's like we're just saying
But
shit.
the fact is that the U.S. economy is fundamentally sound, and that if it were to be extended, it wouldn't really disrupt the U.S. economy very much at all. It would hurt consumers, and we'd have to think about, you know, if that continued, what we would have to do about that. But that's like...
You believe with it? Do you look at this guy and think, I believe what he's saying? I trust this guy?
Really the last of our concerns right now, because we're very confident that this thing is going ahead of schedule.
No, it's not. And then Trump comes out and flip-flopped on this for the 100th time and says we don't need any help escorting ships through the Strait of Hormuz. After we threatened all of our allies and basically said, help us or perish. Then they offered help, and we said we don't want it anymore. And now we've fully walked to the point of we just don't need help. And I mean, how many days ago was February 28th? We're like almost 3 weeks into this thing. On Saturday, we're 3 weeks into it, and it's still closed. It's still closed. I don't know. It's still closed. And seemingly we don't have a plan for it. I mean, it's the only thing we've talked about for the last 3 weeks. It's still closed. How is it still closed? How? And this is kind of just like hanging out here. This is sort of just hanging out, like unsure what to do. Unsure what to do. We're going to ask Fei Zhao about it for sure. Unsure what to do. Unsure what to do. But if I recall correctly, Jonah, professional oil trader, who said, fade this move, is that 1 month of closure equals economic catastrophe. Please find that clip. He said oil to 150 if it stays closed for a month. Guys, we're almost 3 weeks there. Do you realize that? We're almost 3 weeks there. And look, I know I closed my position. We talked about it yesterday. I'm not going to rehash why I closed my position. But I feel like nobody is talking about this right now. We're almost 3 weeks there. And so, while the RR of staying long at 105, 103 where I sold over the weekend was bad, the RR at the stab I took at 93, I think it's pretty fucking good. Really. Yeah, I do think it's pretty fucking good. And so that is basically the extent of our war updates. And I mean, obviously, this guy, Joe Kent, stepping down. Sick name, by the way. Feels like a significant deal. And we can like headline it off, whatever, fuck it, who cares? Feels pretty significant to me, if I'm just being 100% honest. So we'll see. Here's the last topic on war before I move on, which I'm going to talk to Fei Zhao about. Balaji, who's pretty like the U.S. is cooked and China's going to dominate, coded for sure, is like a theme in a lot of his interviews. If Iran wins, it's the end of 5 eras. The unipolar era, the petrodollar era, the post-war era, the Union era, and then 1492, Columbus sailed the ocean blue. He traveled through wind and rain with his 3 ships from Spain. The Nina, the Penta, the Santa Maria, the Santa Maria. 1492 to 2026, the Western era, bro. Gnarly. Specifically the end of the petrodollar. 1974 would also end the unipolar moment. 1991 and the post-war order. 1945. It would mark the moment when Eurasian powers are once again dominant over Western powers. Finally, a rapid crash in the dollar's purchasing power coupled with military defeat could well break apart the American Union. 1776. Is he? I mean, he's like predicting a civil war. Is what that means, right? To break the American Union. It's predicting civil war in America, which is insane. Few seem to viscerally understand just how dependent America is on money printing. But the end of the petrodollar is the end of Keynesianism. What is that? I don't know what that is. Keynesianism as we know it. What is this? Oh, I know who this is. I just chill. Keynes. He argues that active government intervention. We talked about this the other day. He argues that active government intervention is necessary to manage aggregate demand and stabilize economic cycles. He invented capitalism or something. Need to give bro an earpiece. Bro, we're fucking getting locked in on this stream. That's what we do. And if there's a sudden cost of living spike on top of pre-existing levels of political polarization, which are already near civil war levels, we could see the scenarios that Dalio, the fourth turning, and Turchin have described. I mean, bro, he's basically like, we have to finish Iran or we're gonna have civil war in America. Is insane. That's like a crazy take, honestly. Zero comms on what happens if America wins. I guess we get to just keep our status in America. But the only reason I'm reading this post is to basically call out the fact that everywhere I look and everywhere I read, we can't stop in Iran. Like, it just doesn't feel like it's gonna stop. I don't know. Like, I know I already sold most of my position in oil specifically, but it just feels like it is not going to stop. And so we have Fei Zhao on in 40 minutes, and we're going to spend a good amount of time talking about macro, talking about oil, talking about war. But I don't know. Kind of a crazy read. Combine this with our friend Joe Kent, and things are like feels a little bit eerie. Yeah, I sold Palantir to buy oil at the beginning of that trade. Oh, we didn't even look at market close. Actually, let's look at it real quick. Here's market close. Bitcoin 74.5 looks great. Hyperliquid 41 looks great. No such thing as a quad. SPY closed plus 0.25%. Q's half. IGV almost 1. It was up a lot at one point. Let's see. Nvidia was down 1%. Adobe 1. SanDisk like 3. Apple half. Salesforce down 1.5. Microsoft flat. Oracle down 1. Micron's been ripping. Was up 5 today. Amazon 1.6. Tesla 1. Google 1.6. Meta down 1. Chemicals were all up today. Shout out to Tulip King. Palantir up 1 point. Palantir actually looks nice. I sold like 153, I think. Bought at 140, maybe. I don't know, something like this. What else we got? Nothing crazy. Energy's all up. And Circle just continues on a legendary run. So, all right. Let us really quickly talk about this meltdown in tech, and then I want to watch the Taiki stretch, and then we'll do this is what we're gonna do. I want to talk about this tech meltdown, this tech PR meltdown. We'll watch the Taiki stretch video. We'll get Fei Zhao on because he has a lot of crypto takes, and then we'll work backwards, and we will talk about all of the rest. And we're gonna cover the Crypto Vanity article. Trust me. We're going to cover it. All right. What the fuck is going on with tech, man? On what just feels like the worst PR tours in the history of the world. If Sam Altman and Dario wasn't bad enough, just generationally bad. The Sam and Dario press tour was so bad. Finally, they stopped going on podcasts. And now the biggest investor in the world is on this like global tour talking about how he doesn't think.
You don't have any levels of introspection.
Yes, zero, as little as possible.
Why?
Move forward, go. Yeah, I don't know. I found people who dwell on the past get stuck in the past. It's a real problem, and it's a problem at work, and it's a problem at home.
So I've read obviously 400, I think now 10 biographies of history space entrepreneurs,
Yep.
And that was one of the most surprising things. Like, what's the most surprising thing that you've learned from this? So like, oh, they have little or zero introspection.
Yep.
Like Sam Walton didn't wake up thinking about his internal self. He just woke up.
Chat, y'all got an inner monologue or not? I have a crazy one. I do a hella introspection. I'm not gonna lie. Like y'all got an inner fellas. Is it weird to have an inner monologue or no?
It's like, I like building Walmart. I'm going to keep building Walmart. I'm going to make more Walmarts, and just kept doing it over and over again.
And you probably know, if you go back before 100 years ago, it never would have occurred to anybody to be introspective. Like, it's the whole idea of, I mean, just all of the modern.
Is this a thing? Like it's a new. It's just thinking to yourself as like a new thing.
100 years ago, it never would have occurred to anybody to be introspective. Like, it's the whole idea of, I mean, just all of the modern conceptions around introspection and therapy and all the things that kind of result from that are, you know, kind of manufactured in the 1910s, 1920s.
Say more about that.
Great men of history didn't sit around doing this stuff at any prior point, right?
Was it like Marcus Aurelius and like Plato and shit just sitting around talking all day and thinking? Isn't that what philosophy is? Isn't that what they were doing all day? Is you're sitting around smoking weed, doing acid, and talking about Rome?
It's all a new construct. It was you know.
Isn't it? It's called Meditations, right? Marcus Aurelius Meditations. That's the book. No, I think I have it. Do we have it? I have the book. It's called Meditations.
Well, so first Western civilization had to kind of invent the concept of the individual, right, which was like a new concept, you know, several hundred years ago. And then, you know, for a long time it was, all right, the individual runs, right, and like does all these things and builds things and, you know, builds empires and builds companies and builds technology, does all these things. And then, you know, kind of this kind of guilt-based whammy, you know, kind of showed up from Europe, a lot of it from Vienna, you know, 1910s, 1920s, Freud and all that entire movement, and kind of turned all that inward and basically said, okay, now we need to, like, you know, basically second guess the individual. We need to criticize the individual. The individual needs to self-criticize, right? The individual needs to feel guilt, needs to look backwards, needs to, you know, dwell on the past. It never resonated with me.
Then there's this clip right away. I mean, right, it's like right after this came. Someone just dropped this too. Let's watch it too. Fuck it. There's like this whole like PR campaign going on right now about this.
Is it a complement or a substitute? Like what I said about talk and action, is it a complement or a substitute to changing the outside world? So we focus on changing ourselves. Is this the first step to changing the world, or is it sort of a hypnotic way in which our attention is being redirected from outer space to inner space? So I know the one-liner I had years ago was, you know, we landed on the moon in July of 1969, and 3 weeks later Woodstock started, and that's when the hippies took over the country. And we stopped going to outer space because we started going to inner space. And so there's sort of a question, you know, how much it worked as an activator or as a deactivator in a way. There are all these different modalities of interiority. There's psychological therapy, there's meditation, there's yoga, there's you know, there was a sexual revolution.
Look, I think the therapy thing. I have takes in this. I'm not a huge fan of therapy, unless you really need it. I'm not like the biggest therapy fan, but self-reflection is essential. How the fuck are you gonna? I'll give you my therapy take in a minute.
And there were gradually, you have incels living in their parents' basement playing video games. So they're all, you know, there's the navel gazing, that is identity politics. There's a range of psychedelic things, and I think all of these things. I wonder whether the interiority ended up acting as a substitute stuff, because, you know, the alternate history of the 1960s is that you know, the hippies were actually, they were anti-political, and it was sort of that the drugs happened at the end of the 60s, and that's when people depoliticized. You know, it was like, I don't know, the Beatles song, if you're carrying around pictures of Sharon Mao, you're not going to make with anyone anyhow. It's like, that's what, after they did LSD, and it was just the sort of insane politics no longer matters. And so you had the civil rights, the Vietnam War, and then were the drugs the thing that motivated it, or was that the thing where it actually those things started to de-escalate?
So like, what else do I have in here? We'll probably skip that. And then this came out, which is like, U.S. tech billionaire Peter Thiel is holding secret lectures in Rome about the Antichrist and technology in tension with Pope Leo XIV, who warns about AI risk. Thiel says AI regulation could enable a global authoritarian system that halts scientific progress, where the Pope argues regulation is needed to manage AI dangers. Regulation is not going to happen. The private talks organized by a conservative Catholic group linked to the far right have been criticized by Vatican figures in Catholic media. Dude, I just think like most of these tech bros should not. SF AI scene should just elect a public speaker and he should speak on behalf of everybody. And we're just done with it. There should be a democratic vote amongst all of the AI leaders to select one person who is allowed to go on podcasts and do media and tweet and speak. And everybody else is like, bro, it's just feels like it's gonna have cultural impact on how polarizing these people are to the entire world. There's just going to be blowback to this. Like, I cannot remember a technology or a cultural movement or anything similar, correct me if I'm wrong, that was this hated by normal people. And a reasonable amount of the hate is from these fucking podcasts. Like it is. It is. It's from these podcasts. It is these Sam Altman clips. It is these Mark Andreessen clips. Like it matters, bro. It actually does matter. And it's gonna manifest in them making life harder for themselves. It just is. It's gonna manifest in them making life harder for themselves. It's gonna manifest in subsidies. It's eventually gonna manifest in UBI. It's gonna manifest in making political power more difficult, getting laws passed more difficult, policy more difficult. It is just going to manifest in friction. There's no scenario in which it doesn't. It's mesmerizing. Yeah, it's unreal, actually. I mean, I kind of listen to stuff, and I'm like, guys, what the fuck? I think the last example is probably crypto, right? It's probably crypto that was this hated. And it contributed to making our life more difficult. Now, I think that crypto kind of did it to themselves. Like with or without SPF, we still have a bear market. We still have Gensler. We still struggle. Like, it's not necessarily SPF's fault specifically that crypto got into such a dark place, but it doesn't help. It doesn't help. I would nominate Elon and Palmer Luckey to speak on behalf of SF for like the rest of the decade. Would be my nominations. Yeah, Palmer Luckey for sure. Palmer and Elon. And you just, whatever happens, happens. That's who I would pick. Palmer and Elon. And whatever happens, happens. It's like Sam, no. Dario, no. Elon, but no, yeah, sober Elon for sure. What does it say? Dog, AI, cancer guy, and Grimes. Grimes, dude, are you serious? Now, the thing about Elon is that Grimes, bro, what the fuck? The thing about Elon is that Elon used to be a love symbol for the left. Like, Tesla used to be, I'm a liberal. That's what Tesla used to mean. I'm a liberal. I drive a Tesla. And then it became, I'm a MAGA Republican. I drive a Tesla. And the reason that's important is that Elon can do both. He could code switch. He's shown an ability to play both sides. And exactly. Left wing, right wing, Same bird. So that's what I think. I think the public is done with him. I kind of agree, by the way, but he still is just the best. Like, if Elon speaks, you listen, period. Bar none, every day of the week. He's also sort of backtracked on the Trump thing, like deeply backtracked. He got way too deep with the Doge thing. I think he realized like, and completely like stepped back. So, anyways, that's my take. SF Tech is losing it. One more quick one, and then we'll watch the Taiki video. Is that you see Sailor University? No, what is that? He did say Trump was in the files. That was crazy.
Sailor. Since 2008, Sailor Academy has offered free courses to anyone. Millions have learned and advanced without the burden of debt. And today, we take the next step. Sailor Academy has become Sailor University. Still free, still for all. Since 2008.
What? What? Is it all just like Bitcoin courses? How do I fucking close this? What is this? How do I close this? Oh my fucking God. What even is this? Fuck, man. Jeez. Is this just like Bitcoin? Dog. This is nuts. Imagine you got the sailor degree. Kind of a movie. All right, real quick. On the Citrini is still right section. We haven't been covering this that closely. We've been distracted. But layoffs accelerating. Crazy. Actually, crazy. One, Oracle confirmed cutting 20 to 30,000 jobs, and sources are saying the real number is closer to 45,000. I'm hearing it isn't just about AI data center costs. Word is they've been running pilot programs with AI agents doing database administration work for 8 months. One source told me a team of 47 DBAs in Austin got replaced by 3 senior architects, plus automated Oracle Cloud infra. The agents are handling routine maintenance, performance tuning, backup verification, stuff that used to require armies of L4 and L5 engineers. Crazy. Definitely AI driven. Second, and market performed well. Like when did this come out? March 11th. Let's see, Oracle. Oracle, I guess on the day at the top. Yeah, so not great. It's down a little bit. Yeah, it was like an earnings pop at the same time. Second, Amazon confirmed 16,000 layoffs, but the insider sources are telling me the story is much worse. They're saying the 16K number is just phase 1. Internal docs show another 14,000 cuts. A director in AWS walked me through the new efficiency matrix. Entire teams being replaced by 2 to 3 senior engineers running Claude Sonnet workflows. Crazy. Second one. Amazon stock. This was announced March 11th as well. Let's see. Amazon. Also at the top. Basically flat. But flat. Third. Meta HR sent a target of 20% unregretted attrition for 2016-2017. 1 in 5 employees is supposed attrition. 1 in 5 employees is supposed to leave or get pushed out every year. Run the math and see what that does to a team. If you joined 4 years ago with a squad of 10, statistically 6 of those original people are gone. Crazy. Huge layoffs. Huge. And this was what date? March 16th, just announced it. So while we haven't been talking about AI that much, I think we're getting to the point where we're going to start to see the second and third order effects of like the block setting. We'll probably look back and say Block and Jack Dorsey set the first domino. Right? That's probably what we're going to say. That was the first domino. Elon did, maybe. I don't think so. Maybe. I don't really think Elon. It's crazy because Block overhired. I don't really think Block overhired, bro. We did the math. We did the fucking math, and the math was like, no. So maybe some. Okay. Anyways, before we get Fei Zhao on, crypto actually right now looks pretty good. And the guy with the most motion in fucking macro Twitter is more bullish than most of my TL. If sentiment flips positive here, it seems like crypto has the most torque. Vaguely reminiscent of July 2021. Now, Crypto Bro tried a bull post without using an analogy challenge. Impossible. But regardless, Michael Saylor has access to the infinite money printer that he previously just didn't. And I think the Bitcoin trade, at the very least, has structurally changed a little bit. And so a new Taiki video dropped, and he basically is explaining why he's bullish on Stretch, which is the strategy product. And so we had the guy come on and explain it. I don't think he did the best job. He did fine, but I don't understand it that well. And we have 18 minutes before Fei Zhao. And so we're going to watch the Taiki video. It's 30 minutes. We're not going to watch the whole thing, but we're going to watch 15 minutes of it. I want to hear his take. I haven't watched it yet. I saved it for stream. I was going to watch it while I was eating my food this morning. So let's fucking go. Stuck.
Over the past week, the crypto market. So that being said, why do I think that the market has bottomed? And
by the way, Taiki fucking printed on shorts the whole move down. So I give this guy I take seriously what he has to say.
And I mean, all these things, you can kind of like flip it, right? Change the wording a little bit. But I mean, of course, I'll go step by step. But
he's 1.25. Let me know if you want to go 1.5.
Position right now, and then who's the marginal seller and buyer. I think right now, in terms of positioning, people are, generally aware of the Hoyer cycle. People are prepared for a potential Q4 bottom. And there's a lot of these people that say, oh, I'm just going to sell my coins now. And then, I'm going to buy like 45K Bitcoin in Q4.
A lot of this.
In the meantime, I'm going to just do nothing. And, I'm going to ride my 5X in the next 2-3 years, which sounds like a nice idea, right? The idea that you can just do nothing, wait until Q4, buy this magical bottom, and then make money and go to Valhalla together. But I do have a few problems with this mindset. Of course, it could pan out, but I also think it's very lazy. These assumptions are very lazy. And if you think about it from first principles, I mean, we've had we're 6 months into the bear market, right? That means people have had 6 months to prepare for this, theoretical Q4 bottom. And people are aware of how badly things can get. But then again, for there to be a Q4 bottom, we have to have...
I'm putting 1.5. Is that fine? It's a little slow. Oh, it was normal. Okay, we're good.
A market where the participants are aware of it, therefore they have de-risked. And also, not only have they de-risked, when it's Q4, we need people to be just exorbitantly selling all their coins, right? Because for us to hit new lows in Q4, there has to be some liquidation or some capitulation event. But if people are already, comfy in cash to some extent, right? Like maybe 50-50 cash, crypto, like whatever the ratio is, I just don't really see how something like this can happen. Of course, if there's a recession, if there's some AI bubble deflation or some more, these things could happen, but I tend to not assume that I have an edge in these things. So I try to focus on
the same way you need new buyers to push it up, you need new sellers to push it lower. Who are these new sellers?
Fund managers that I talk to. most of them are over 60% cash. And it's not that they're bearish crypto, they're just waiting for one leg lower. And then the question is, what happens if that doesn't happen? And I think that the reemergence of Saylor will prevent the next leg lower, meaning that these people have to buy back higher. And, of course, I mean, the number 2 question, it's kind of, hand wavy, right? Of course, there's always marginal sellers in crypto. It can always get worse. But loosely and generally, what I observe is that this market is a lot of crypto tourists are gone, right? And a lot of the crypto believers are just, heavily in cash. And, maybe that's fine. But, like if your target position for crypto is X, I think that, across the board, it's definitely under X, whatever that, percentage is. And of course, just focusing on the lack of sellers is not good enough, right? We can't bottom bottoming requires 2 things: sellers to be exhausted and then buyers to step in. And for a long time, we really haven't had a marginal buyer that was ready to just take us take us higher. But I think Stretch and Saylor is really going to be that marginal buyer that takes us higher. So let's talk about Stretch and the reemergence of Saylor. So if you study if you study Saylor's, I guess, Twitter or X, you see that all he talks about is Stretch. You can just scroll down, like all he does is talk about Stretch. And I think this is true for the other C-suite executives, and I think they know that the only way out for MSTR to get out of the rut that they're in is to really, really pump the usage and adoption of Stretch. And what Stretch is it's this fixed income product that's meant to pay 11.5% fixed yield. And Saylor, right, issues this credit.
Remember the guy came on stream and told me to put my mortgage into Stretch?
And with that money that he borrows, he is looking to buy more BTC with it. And the idea is that, MSTR owns a lot of Bitcoin. They can, issue credit against that capital, and they can monetize the appreciation of Bitcoin and pay the interest payments by issuing MSTR or selling MSTR on the back holders. So Stretch holders receive cash flow and stability, right? They get a fixed 11.5% rate. And, MSTR holders can benefit from, if they buy Bitcoin with it and Bitcoin goes up by more than 11.5%.
If I give you 1 Bitcoin, would you give me
MSTR
8K a year for the rest of your life?
So this is a chart for STRC. So they launched around July. There's a lot of volatility, right? They also launched basically at the top. So, I think when Bitcoin was volatile and going down, it was hard to own this thing. But in the last 2 months, you can kind of see that there's less volatility and more demand, right? In terms of volume bars here, which is kind of interesting. I'm not going to go over, the nitty-gritty part of Stretch. If you want to learn more, I highly suggest, reading this article via Victor. If you think that there's a 10% chance that Stretch can bottom Bitcoin, I think, you owe it to yourself, right? To try to understand how this thing works. In this video, I'm going to try to, compress it down into the important factors and, kind of dumb it down so, degens can understand, right? Because I'm a degen myself. But the TLDR here is, it's a yield instrument. It pays 11.5% monthly. Anyone, like all the money that goes into Stretch goes into buying Bitcoin. This thing can scale without increasing their leverage, and every dollar of Stretch issued roughly translates to like $2 to $3 of Bitcoin, right, being purchased by MSTR. So Stretch holders receive a stable yield with less volatility. MSTR holders absorb the rest of the volatility, but they get more upside at least that's the trade. To put it really simply, right, like I mentioned earlier, Saylor is just saying that I expect Bitcoin to go up by over 30% per year. So if the market allows me to borrow cash at 11.5%,
I think that's at 1.8% is Bitcoin's annual growth needed to keep this like Ponzi going
per share metric, right?
Is that right?
Know how. I personally have a hard time owning strategy, but at least I can respect the financial wizardry. So of course, this is a form of leverage, and he is essentially taking money from the future to buy Bitcoin with it in the present. And the way this works is if Bitcoin goes up a lot, obviously, right? If it doesn't, then it does not work. But for the time being, Stretch. So if you look at the USD reserves, they have over $2 billion in here, which equates to roughly 28.5 months of dividend coverage, meaning that they have enough cash to pay over 2 years worth of liabilities.
Crazy.
So in the short term, he has enough runway to pay liabilities for over 2 years. So as a farmer,
is this free money for now? Because we could just track these liabilities. Like, should I be giving this more attention?
Or as a
11% is like,
or investor, it seems like a pretty interesting proposition, right? This thing is promising an 11.5% rate, and this company has over 2 years worth of runway to pay these dividends. And for me, I personally, right, I've never owned MSTR.
I don't know what it is
bought
though.
Stretch, right, just to experiment with, and then I thought to myself, wait, like if I'm buying Stretch, like the money going into Stretch is going into Bitcoin, and if I think Stretch is a good product, then I should expect more money to flow into Stretch. But if that happens, then all that demand goes into buying Bitcoin. Can this situation cause problems in the future? Yes. However, because they have enough runway, I don't have to worry about that. And the simple question is, in the next 12, 16, 18 months, will there be more?
You don't get the upside of Bitcoin, but it's like money I have in
I
cash.
think there's more. And if that's the case, I just think that there's going to be a lot of, I guess Bitcoin demand that Saylor can leverage in order to, I guess, capitalize on this. And Saylor is very interesting. I mean, there's more points I want to share later in the video, and it's really, really fascinating what he has done here. So obviously, Stretch IPO'd in July, and they raised like 2.5 bill at like $80 or $90. And then, in the following weeks and months, they didn't really do much just because the markets were kind of bad. But, ever since we bottomed around 60K around February/March, 2 weeks ago, they bought $377 million worth of Bitcoin via Stretch, and last week, 1.18 billion. And I just don't see how this stops. And if you think that there's going to be more demand for Stretch, then that's, indirectly, or I guess directly, more demand for BTC. And I think, I mean, I could be wrong on this, but my thesis here, and this is like the main Bitcoin bull case, I think the Stretch can be reaching some sort of escape velocity where it's becoming more trusted over time, and the risk profile is safe enough, I guess, in order to attract not only crypto investors but also outside investors.
The volume
And that
chart
will
is bullish.
enable him to buy hundreds of millions of Bitcoin every single week, if not billions. And it's interesting to me because generally, like these DATs, including strategy, they usually buy tops, right? Like they just, it's so positive.
It's getting real flows.
There's so much reflexivity that they just like top blast, right? Which sends coins higher. And then once we enter a bear market, they just stop buying. But via Stretch, they're essentially just levering up to buy the bottom, right? And if it works, then it works great for MSTR shareholders and also for Bitcoin holders. So I thought that was interesting. And, to get into the nitty grittiness of, I mean, I said I won't get into this, but I also think this is kind of important to know. So obviously, like, Stretch pays monthly dividends. So the vertical lines here, the yellow lines, they mark X dividend dates for Stretch, meaning that if you hold Stretch into these dates, you get the monthly dividend. So what you see here is, historically, a lot of holders, I suppose, hold Stretch into this, and then they dump it before or after the X dividend date because they're already eligible. And then, Stretch, I guess, pegs below 100, and then buyers step in. And of course, when the markets were volatile and going down, this was, a lot of weird stuff happening here. But in the last 2 months here, in the month of February, it went down less than 1% and then got back to 100 immediately. And now we're basically at 99.7. And how Stretch works is, once if Stretch is over 100, Saylor can borrow money, right? Essentially, right? He can issue more shares, essentially borrowing money. So if Stretch quickly gets back to 100 this week, tomorrow, like whenever, then that's a signal that people are buying Stretch, right, for the 11.5% yield. Saylor is taking that money and saying, cool, I'll buy Bitcoin. So yeah, Saylor is turning demand for, I guess, yield, right, a demand for dollar yield, I suppose, into Bitcoin buying and structural demand. So you can imagine a world where if this thing gets big enough, that's just constant buying of Bitcoin, right, through Saylor. And, he can create new products like a Stretch-backed stablecoin, right? Maybe it's like 80% backed by Stretch, 20% backed by T-bills, and maybe there's other things that he can tranche and try to ship it or pitch it to Wall Street institutions. And it's one of those things where in the short term, it's a pretty good product, and I don't mind holding it. Can it get more risky in the future? Yes, but in the short term, it's a pretty compelling product. So I'm in there. But if I'm in there, I should be bullish Bitcoin. That's kind of where I'm at. And taking out the lines to make the chart more clean, we see that there's more volume, more demand, more Bitcoin buys, which should imply that there's
it's a
more
pretty
trust,
good thesis. I mean,
and demand for this type of product. And we see that in the last 2 months, less volatility, which also means more demand, and there should be more trust around the product because this is a product that should trade around $100 over time. That way, Saylor can pitch the idea that like the Sharpe ratios are high, there's no volatility, you get Bitcoin-backed yield, digital credit, etc. And my bet here, buying Bitcoin, is that we are in the early stages of the capitalization phase of Stretch, and this is actually like the first strategy product that I can consider like using as part of my portfolio. And if it works for me, then it should work for others. And if it works for others, that's a lot of demand that can go into this product, which means that Bitcoin is going to be bid right for the foreseeable future. This is the the total Bitcoin purchase from Stretch.
Wow.
And obviously since July, it's been kind of slow, right? It hasn't really been able to do much. And then recently, it's really accelerated in the new year. And my bet is that it's going to continue going up. So yeah, you can believe in the 4-year cycle, but if Saylor is able to like lever up his firm and just buy more Bitcoin, then I just don't see how Bitcoin can stay.
Yeah, it's the volatility is the problem with
Bitcoin.
Bitcoin.
So an interesting way to reframe this, and this is like what my friend sent me. So, when you're long perps, you're essentially paying a funding rate, right? So on Binance, and this is also the case for perp dexes, but the baseline funding rate is 10.95%. So if you're like lever longing Bitcoin, you're paying roughly 11% to lever long Bitcoin. And if the markets are hot, then the funding rate can go up. If the markets are bearish and people are super short, then it can go down. But generally, right, it's around 11%, and then it goes up and down based on the state of the market. And I'm not sure you can see this, but like under my face, but what my friend sent me, and I was like, this is like very, very interesting. But Stretch is in a way like a way for Saylor to long perps, right, for Bitcoin, because he's essentially borrowing money to buy Bitcoin, right, which is kind of like how perps work, right, like leverage. And instead of paying like funding that varies depending on the state of the market, he's paying a fixed funding rate, right? So instead of, us having to worry about whether or not funding can go like 30% to 100% or minus 30%, whatever, right? He gets to say, okay, like we issued this new stretch product and we're just going to long Bitcoin at a fixed 11.5% rate. And it also
try to sell my house and buy half Bitcoin, half
dollar,
gold.
It's not really
just buy
a dollar
Stretch.
stablecoin, but Stretch is kind of like this Athena thing where you can just get a decent coupon as long as you trust MicroStrategy and Sailor to do the right thing. I just thought that was interesting, right? Like this fixed rate perp long.
Almost done.
And I was like, huh. That's kind of bullish, right? Like Sailor is starting to just lever long perps if you really think about it, and the cost to long is going to be fixed at 11.5. It's like not even that bad if you're actually bullish Bitcoin. So going back to this, how are people positioned? Who's left to sell? Who's left to buy? I mean, I mentioned that sentiment has gone.
Yeah, ticker physiognomy is a little bit. Stretch is crazy. Like fuck. I'm long Stretch.
Extremely bearish, and market positioning is the lightest it's ever been. I mean, I can't really prove this, but in my conversations with people and I guess like what I see online and looking into people like funds positioning, this seems like it's the case. And at the same
I'm out of Stretch. I'm stretched out.
time, Sailor has essentially found a way to leverage his Bitcoin holdings to buy Bitcoin, and his buys are accelerating, right? So positioning is light. Marginal sellers still exist, but I worry about the lemma. I worry about them less. And now we have Sailor just going ham. And when I think about it, I just think it's a good setup to be long. I had a hard time going long, honestly, just because, I am scared about, downside volatility, like downside risk, just because, I mean, the price action has been so bad for crypto for the past 6 months. But at some point, right, a setup forms, I think about who's buying, who's selling, and then Sailor is just going ham. Like it's hard for me to be bearish. It's hard for me to envision a world where crypto doesn't go up from here, absent like, geopolitical tensions. But I mean, we've also had that for like the past month. And
look, the what I like about the thesis is it offers a take into where a new marginal buyer could come from that wasn't here to buy Bitcoin before. That is what I like. I like that. Like it introduces a new potential buyer of this stretch product that would not normally have access to BTC. And so after Fei Zhao gets off, we'll watch the risks part because fuck it, why not? But that you have to be like, all right, like it's definitely worth paying attention to because clearly this chart has entered some sort of reversal. Now, if it lasts or not, my chart is a mess. I'm sorry. Fuck, Luke, this OBS thing just crashed. I'm cooked. I'm after rug stream. Why does it do this, bro? Damn, I'm cooked. I got a rug stream. So gay. No! Come on, bro. It's so annoying. I gotta close OBS. I think it's gonna crash my screen. Chat. I'm just gonna do it. I'm just gonna do it. And then we'll just get right back. It's not gonna take long. It's so annoying. There's nothing I can do though. Is it gonna rug the whole? Fuck my life. All right, chat. I'll be back. There's nothing I can do. I'll be back in 30 seconds. Oh, that's so annoying. It's just like frustrating. Is Twitter still live or no? Is Twitter still live? I gotta restart Twitter. So annoying. My fault, yo. There's nothing I can do. Very frustrating, but is it live on X, like for real? Okay, nothing rugged. Bet! Not that bad then. We're fine. Sorry, Luke. All right, I'll be back in 30 seconds. And my GOAT is coming on Fei Zhao, who I'm not going to lie, is the truth. BRB. Thank God. Honestly, thank God. Let's go. That must be bad.
Yeah. Look at the mirror, it turning to ice. It say you the man, so talk to me nice. I'm catching a chick, I'm out for the night. Over your CEO, gotta talk to me nice. Industry man, cause I get all the hype. I'm in niggas' heads, I'm looking like lights. I buy the thing without checking the price. The boy from the six gotta talk to me nice. You see the teen nigga, look at the management, marketing genius. Look what I'm averaging. Flew out the Thursday, go fuck up some lavish shit. I hate the baddest, but I'm never bragging. Move precision, no looking, no catalyst. Breaking down plays like an NBA analyst. I learned the ways when I sat down with Jack. My arm getting stronger, my words for the facts. I'm at the point I can touch on the moon. If I'm about to touch it, I'll walk on the tube. If I got partners, I'm sending the goons, and they do it now, I ain't got nothing to lose. I'm hitting numbers when I'm on the news, but you just start growing when you hit the news. I got the gun and I'm ready to shoot if one of these niggas is trying to pursue. Look at the mirror, turning to ice. It say you the man, so talk to me nice. I'm cashing the check, I'm out for the night. Over your CEO, gotta talk to me nice. Industry man, cause I get all the hype. I'm in niggas' heads, I'm looking like lights. I buy the thing without checking the price. The boy from the sis gotta talk to me nice.
That wasn't bad at all. I can't believe it. Like, we're back. We lost some Twitch viewers, but what are you gonna fucking do? If you're watching on YouTube or Twitter and you want to chat, twitch.tv/threadguy. Okay, chat. Who here knows who Fei Zhao is? Does everyone know him or not? You on it for the Mason Margiela Supreme. Oh, did the Shure mic drop yet? Supreme Shure mic. Did it drop? Did it drop? Look, I'm copying. This Thursday. All right. Fei Zhao is the GOAT. Okay. He's one of these macro guys that just really understands CT and our culture. And I really want to talk to him about the war, the oil trade, but like headline trading, Anon's running Twitter, the whole discussion. And so if you have questions that you want answered that I'm unable to answer, this is like the guy to answer them. Like, I would fucking lock in and ask this guy your questions. Seriously. Hi, Threadguy. I love your content. Learned a lot. I'm especially interested in your mega church from Medic trading idea. I tuned in a few years ago and you were talking about a book covering this idea. You talked about a chapter. Basic CZ got to give me some fucking credit, man. Put some respect on my name. All right. Fei Zhao interview right now. Let me just tweet. Live with Fei Zhao right now. Cool. All right, let's get it. Malcolm, don't be so quick to fucking share that thing with people, man. It's like, no, just kidding. All right, let's get it. 1 second, sir. Let me get you pulled up. And
Sweet.
Boom, you're on the big screen. Mr. Fei Zhao. What's up, man? Welcome back
What's
to the
up?
screen, dude.
Dude, good to be back with you. You've been killing it since the last time we chatted.
Thanks, man. You too. You're I don't recommend much content to the stream, but I'm like, you have to tap in. It's absolute must when you post a recording. So it's good to see you, man. How you been?
I've been good, you know. I've just been trying to be as non-introspective as possible, you know, just trying to not think about anything ever. You know, just trying to move fast.
Dude, I said like SF Taxi needs to just like elect one person. He's the only one that's allowed to go on podcasts and speak, and nobody else should be allowed to.
Dude, you should run their PR. I was listening to you say that. And I was just like, it's insane. Like you just have these guys, these like, I don't know, autistic SF guys that get out there and just say the most tone deaf things of all time. And it's just like, it's brutal.
It is pretty brutal. It's hard to watch, but at least it gives us some content to talk about. But man, the last 3 weeks and my entrance into the geopolitical career has been something. We've talked a little bit, but I don't know. Give us like a quick intro really quick. Set the stage real quick, who you are, what you do. I think most people here know who you are. And then we have a lot we need to cover.
Yeah, we got a lot to chat about. Yeah, I'm the head of content at Blockworks, so I oversee all our different podcasts, newsletters, help with events that we put on. That's most of my day job. And then I'm also the host of Forward Guidance, which is a podcast on the Blockworks network where we talk a lot about macro, crypto. I do a roundup there every week where I chat with a couple of my buddies who work at funds and that sort of thing, and we talk about what's going on in the macro world. And then I interview big macro chads every Tuesday, Wednesday of the week. So yeah, fun to be on the other side. You know, been a big fan of what you've been up to, and yeah, excited to talk about macro and what's going on.
Podcast is great, chat. You guys should check it out. I mean, I guess let's just like start. Where are you right now with like the oil trade and the Iran conflict? I know it's a big question, but where are we in this process, and how have you traded and or thought about this conflict as it's going on? Since I think February 28th was the initial strikes.
Yeah. So going into this, you know, you could see, right? Anybody that's monitoring the situation could see that the U.S. is moving a ton of military assets to the Middle East over the last month or so. So you're like, okay, well, either something big is going to happen, or it's just going to look really stupid to move all these assets in for nothing to happen. So kind of had a feeling, and it was pretty well telegraphed. And you started to see oil and like oil producers, XLE, start to rally over the month of February into this thing. And during that time, I was of the mind of, like, this is how I was thinking about the macro situation leading into this, which is that, okay, last fall we had the government shutdown. We've seen a lot of layoffs on the government side of things. You know, just the fact that you close out that entire sector, like, it leads to a negative growth impulse for the economy. So during that time, we also had really low quality economic data. So we didn't really have a good idea of what was going on in the economy, because, you know, the BLS wasn't producing out jobs reports and that sort of thing. But my thought process was that coming out of that and into the early winter, like January, is, you know, if you look at something like the ISM PMIs, it's just like a way it's like survey data of leading indicators of what businesses are going to be doing. And the manufacturing PMI, so looking really at manufacturers in the U.S. economy, that had been below 50. And for those who haven't looked at like a diffusion index before, basically if it's below 50, the economy is contracting. If it's above 50, it's expanding. So the manufacturing sector was below 50 for like the last 2 years. And it went positive for the first time durably for the last 2 months, January and February, at the same time that we started to see this improvement in like manufacturing payrolls, like jobs created in the manufacturing sector. So I was of the mind that we had gone through either a mini recession back in April from Liberation Day, and then the hang up of the government shutdown in last fall, and that, okay, we're finally through these, and we're starting to see this uptick in the manufacturing sector, in the industrial sector. And I thought that was going to lead to continuation in, you know, like industrial commodities like copper, a super long copper in January. So everything was looking great. And then we get this energy shock, this oil shock in the end of February. You know, you've been all over it and kind of killing it. It's been super cool to watch you try to uncover oil markets. Like, I'm not a big, I'm not a big commodities guy either. Like, you know, bit more like bonds and that sort of thing, and currencies and equities, and gold and Bitcoin is mostly what I trade. But yeah, I've been trying to get a good understanding on how to think about all of this. So yeah, we had the initial shock at the end of February, and then now the name of the game is, like, in terms of what's relevant to the economy and markets, it's all about like the Strait of Hormuz. And everybody's been, of course, focused on the oil market and what's been going on there. But it's also important to look at the other important commodities that flow through the Strait of Hormuz. Like, Qatar is, they export 20% of the world's LNG, and that got hit by a drone by Iran. So they haven't been producing LNG for the past like 2 weeks at all. So even though we're seeing, you know, the odd oil tanker from Iran move through still, those other sectors and commodities, like the LNG market, if you take off 20% of the world's LNG supply, like, that's not something that you fix really easily. And the same thing with the helium market, which is super important for basically going into the AI data center build out and like chips. Helium is an incredibly important commodity, and a huge proportion of helium comes through the Strait of Hormuz. So those other sectors that I don't think have been talked about enough are really important to keep in mind of how it trickles through. So, okay, where we are now, March 17th, Hormuz has been closed for a couple weeks now.
Almost 3 weeks.
When it's like almost 2 weeks now or something. Yeah, it's insane. But I was just looking at the futures curve of the different like CL contracts before going on here, and it's really interesting. Like, when you look at the front months, the first couple months contracts, those have been coming off the recent highs. You know, like we had the initial.
Yep.
What are we at? Like, we're CL is trading at $96 right now.
Yep.
It was at like 114 on that recent high. Yeah. But then when you look at the 2027 contracts, like if you look at the February 2027 contract, we actually took out the recent high from March 9th on that recent one. So
Whoa.
the further out of the curve is actually still hitting new highs, while the front month is chopping around. So like, how do you digest that? Is that, okay, we're worried about the duration of the crisis. Like, I think the front months, a lot of it has been baked in. You know, it needs to get, you need to see things like the U.S. striking Cargill Island and like the actual oil assets there and that sort of thing. I think for the front month to really start to go higher. But the real name of the game now is trying to understand how long this formula is going to be closed for, and how does that get priced into the longer dated contracts of the oil market. So the longer side of things, like the 2027 contracts, are still going higher. So things are getting worse on that longer term aspect. And that's the main thing to figure out right now, is like, how long is this going to last? And then we could probably talk about the economic consequences.
Yep.
But that's how I'm thinking about things.
So one of the things that I learned as, I'm like 2 weeks into my geopolitical career here, when I first entered the oil trade, is that we could talk about the Strait of Hormuz and how it's like almost hard to fathom that they didn't have a plan to keep this open. But the second thing I learned, like when I entered the trade initially, was that the levers the U.S. could pull, which was like a Trump taco and then this SPR, Strategic Petroleum Reserve, was a complete nothing burger, basically, because they have, they hit you with the double, the bang bang. So they have this big number, 180 million barrels or whatever. But I think the most they can release is 2 million barrels a day, because these things are in like fucking salt caves in Texas, and they'll implode.
You got to push water up, and it's insane.
And they'll implode if you take out more than 2 million barrels a day, and we're like 20 million barrels short. And so I was kind of like I was researching what's happening, and I'm like, wait, this is actually legitimately, genuinely a nothing burger, and they have no other levers to pull other than getting the straight back open. And so I closed over the weekend just because I was just like up enough. I'm like, I don't know shit about oil. I don't want to round trip. But I've since like reopened a smaller size, higher leverage at like 93, 94 crude, because they can't get it open. And so to your point is like we're starting to price in these like backdated contracts where everyone's just trying to figure out how long is this conflict gonna go on for. And every day it's like, the counterterrorism director just stepped down. And then a couple days ago, Trump comes out and he's basically like threatening U.S. allies to form this coalition to escort ships through. Now he's like, fuck it. We don't need you guys. You're useless. He was begging China. Now he's saying he's going to do it. But all this time has passed, 2 weeks, 3 weeks, and we can't get a single ship through. And so are you long oil at here?
I'm not long oil specifically. I'm long or short a few different things. Like, I don't know. To be honest, I think trading direct oil futures is really fucking hard. And like, I'm stoked that you made money, but I'm not thinking I'm gonna make a career out of this, by the way. Yeah, no, for sure. But it's difficult for a few different things. It's a very efficient and sophisticated market. Like, there are some very well regarded oil specific hedge funds that have blown up before. Like, I don't know if people are listening, go Google Pierre Andurand. Like, people view him as like one of the best oil hedge fund managers, and he's blown up funds. Like, it's a really difficult market
during
to
this
trade.
Or previously.
No, previously. Okay. I don't remember when. I think it might have been 2008 or something. Anyway, really well known oil hedge fund guy. So there's a few different things I'm looking at. My big conviction right now is honestly on the US dollar rallying, the Dixie. And it's because, so this is how I think about it, is that a lot of the stuff going through the Strait of Hormuz impacts Asian economies and the European economy. Like, Japan is highly dependent on the flows coming through there, and other Asian markets and that sort of thing. Like, Qatar's LNG capacity, all that volume, that goes to those countries. The US is actually, this is the first major oil shock where they're largely energy independent. Like, we had the US shale boom in the 2010s. So the US is actually in a much better spot than in 2008 when we saw the last like big oil surge in 2022, or like the 1970s. Like, the US can actually produce its own oil now and be largely independent. You can't say that about those other countries. So my thought process is that this is a really, really bad, way worse for Asian markets and European markets than the US. I actually think the dollar will rally because all these other countries are probably going to go into recession if this holds on for much longer. Like, you just can't operate under this situation. And then at the same time, like, when I look at how central banks are reacting to this situation, this plays into the currency thing, is like the Bank of England's pricing in a rate hike right now. The ECB, like Europe, they're pricing in 1.5 hikes. BOJ is kind of unchanged. And then the Fed are the only ones that are still mostly pricing in a cut. I mean, it's less cuts now. It's like 1 versus 2 that it was just a week ago or a couple weeks ago. So that doesn't make sense to me. It doesn't make sense to me for Europe to be hiking into this situation, because the demand destruction side of things is going to be a lot more acute for them than the US. The US has plenty of oil and energy and their reserve currency. Like, I think the US is actually in a much better situation than these other countries, but the currencies don't reflect that yet. So you started to see some dollar rallying, but I think it goes on further, and that sort of drives a lot of my other frameworks for other asset classes. Like gold, I've been pretty negative on and sold most of it into this because I had a feeling that this US dollar rally would, like, dollar going higher is bad for gold. And so far that's been the case. And so, yeah, like I have these other more derivative expressions of the trade, but not directly oil specifically. I think it's like you missed the easy trade. I mean, I had some stuff going into it, and that was good because, like I said, like, you know, when they're moving all these military assets to the Middle East, you're like, okay, something's probably going to happen.
Seeing it
You're like, I can play a pop here in oil for sure. But from here on out, like, I think you have to really know what you're doing, and like I don't.
Me either. Before I ask you about the dollar, do you think Besant was in the order books trading oil futures?
Smart people. I mean, yeah, your buddy Pee Pee Poo Poo seems to think so.
A lot of smart people seem to think so, right?
Yeah. I mean, yeah.
What are the implications of if that actually happened?
Oh God. I mean, it depends how he's even doing it. Like, the U.S. Treasury is an interesting one in terms of how they can do things without people knowing. Like, there's certain facility. One of them is called the ESF, the Exchange Stabilization Fund, where basically, like, Scott Bessent just has his own, like, little mini hedge fund within the Treasury, and he can trade currencies and those sort of things. Like, you know, that's putting it in a fun way. In reality, the way they'll say it is that they can buy or sell different currency reserve levels depending on a million other reasons, and that doesn't have to get reported for like a year. So there is ways. You know, some people think that he's
how much money
basically put on.
You say little mini. How much money?
I think the ESF is like 150 billion or something.
Okay.
No. I don't know. I'm totally good. Let's see. ESF size Treasury. Let's see how quick Google is.
Just a little mini fund, 150 Bs.
Yeah. Oh, okay. No. Reported a net position of $39 billion with total assets around 210 billion. So yeah, it's big.
Okay.
So some people think he's putting on like a curve trade where he's like shorting the front months and long in the longer dated ones as a way to refill the SPR. And that's possible. I don't know. Like, I don't even know how to even think about that. It's not really something that's truly been done before. I mean, the head of the CME who runs all the futures said it would be a disastrous. Like, it's just because like it destroys any sort of price signal when you have the government in the order books. Like, that's just terrible.
It's like the truth signal is, I think he made this tweet. It's like the thing we use to monitor how bad the situation is no longer accurate, right?
Yeah, 100%. I mean, it's actually kind of funny because that is why I got into Bitcoin originally. Like, I was originally a macro person, and I got into Bitcoin because when I really dug into what the effects of things like QE were doing on interest rates, which is used as like the bedrock foundation for discount rates for literally all assets, like that manipulation starts to skew the price signal you get because the discount rate is manipulated. So then, like, signal and price starts to break down. And for me, it was like Luke Roman, I don't know if you listen to him much, but he's talked about Bitcoin being like the only existing fire alarm in the financial market because it's the only one that like isn't truly manipulated in that way. So you can actually
just like a little bit.
Yeah, I mean, now you can just call it like a Michael Saylor machine. I don't know, maybe a few years ago it was more relevant, but yeah, things break down and get weird when government intervene in markets.
Okay, what happens to the this idea of the petrodollar from here?
Yeah. So it's interesting. There was, I assume you're referencing some headlines that came out last week, where it was like, all right, we're not going to let anybody go through the Strait of Hormuz unless they start to settle in like Chinese yuan and that sort of thing.
Exactly
And
that. Yeah.
yeah, it's like it's a direct call out to, largely the petrodollar system.
Yeah.
You could
And
see it
also
as,
like
as
these
one of the
GCC countries getting fucking attacked, and the U.S. is sort of
yeah.
like, right? Like,
Yeah, yeah. I mean, so if you take the argument that the foundation of how you employ and execute on having a reserve currency, a global reserve currency, is having global energy priced in that currency. So dollars. So yeah, like that is how this all really began back in the 70s. Is the petrodollar system, which is that okay, crude needs to be settled in U.S. dollars. This is a way for U.S. dollars to get out into the rest of the world, as well as running like a big trade deficit where basically countries like China and Vietnam produce things, it gets imported into the US, and then US dollars get exported out to those countries. And, those two systems are like the flywheel of how the reserve currency actually works. So, yeah, like if you move to a world where global energy is not being settled in dollars, like it can be priced in something else, but as long as it's actually settled in dollars, that's the important part. So, yeah, like on the margin, if we keep seeing these headlines of less and less of these things being settled in dollars, like I don't know, that's a bad situation. I think it was Gaddafi who years ago wanted to have oil settled in gold, and then within a few months the US was there and he was dead. Like it's a very
Whoa.
foundational part. Yeah.
Wait, I don't know about this at all. What's the contact? I don't even like really know who that is.
Gaddafi, he was the prime minister of Libya, and they're a big oil exporter, and he wanted to price oil in gold or have it settle in gold.
Whoa.
And the US did not like that. And so he was basically uprooted. I mean, like he was a dictator. Like he wasn't a great dude at all.
Fuck, that's insane.
But
how much
like,
are you thinking about this petrodollar idea when you're thinking about like the trade of the dollar?
Yeah, I view it through the lens of when bad things happen in the world, people go for dollars. People need dollars because of a variety of reasons, whether it's the debt that they hold at a sovereign level is US debt denominated, or just, like things that need to be settled and cleared in US dollars. It all leads to a rally in the dollar. So what's been interesting is that everybody still wants the dollar when these bad things happen, but more so nobody wants US Treasury bonds anymore, like 10-year bonds. Traditionally, when you had these big oil shocks, and I wrote a piece on this, but typically what happens is that something bad happens in the world, the flight to safety is into U.S. Treasury bonds, and this time it's been the opposite. U.S. Treasury bonds have been selling off, like yields have been going higher. So there is that lack of confidence in the long duration of U.S. assets.
But short term, you want dollars.
Yeah, exactly. Short duration, like dollars is just like ultra short duration U.S. Treasury debt in a way. People still need that and want that. So that's still there, and I think that's like. You always hear people talk about the dollar milkshake theory, and it's why I'm kind of a fader of the whole de-dollarization thing. Is that at the end of the day, like when shit hits the fan, like it is right now, people reach for dollars because it's the cleanest dirty shirt. Like tying it back to what we talked about with Hormuz, like all these other countries are so much more affected by what's going on in Hormuz than the U.S. that it's sort of like the cleanest dirty shirt. Like I'm gonna go over here where. There's U.S. shale and U.S. is energy independent and the reserve currency. It's a good place to hide out.
So you're short term hiding in the dollar, but long term you don't want to touch these bonds.
I like short term U.S. dollars, like T-bills and stuff too.
Yeah.
Like I think that's a great place to be. But yeah, long dated treasuries is terrible. Yeah, like even during these acute crises, nobody wants them anymore.
The cleanest dirty shirt is awesome.
Yeah,
I like that.
Shout out, I think Brent Johnson, who created that whole
it can be yours.
milkshake theory. Yeah, we can call it mine though. Yeah, it's crazy.
I like that. Okay, this is a crazy. My favorite topic that I've learned through the geopolitical stuff is that, well, at a baseline, finding correct and accurate information feels like it's impossible. right? Like
Yeah.
the news is wrong and late. YouTube is wrong and late. Everyone in these like in the Middle East is like going to jail for posting footage of what's happening. You're listening to Trump versus whoever is in charge in Iran, and there's maybe some level of truth, but they're both posturing, they're both tacoing together, they're both LARPing, they're both like, like Pete Hegseth, how much of what he won't say how many people are dead. Like it's like there's just like a lot of posturing and misinformation going on. And the people that are known for covering this, the news outlets, don't do a good job. And the people that do a good job are these fucking random, anonymous. Like my list that I gave the chat is you, pee pee poo poo, Chumbawamba, and Calvin for like a couple hours. It got a little bit ridiculous, and a couple others. But it's like these Twitter anons are trading this. Like I think I saw like Citadel lost like 2% on the oil squeeze, and PP Poo Poo posted a P&L of like $6 million. Like he just like destroyed Citadel in the order books. These like random anons. And we see this in crypto all the time, right? This is like the crypto game, but it's crypto. And you're like, yeah, of course, it's meme coins, it's on chain. Citadel doesn't want to trade this stuff. Well, Jane Street was, but whatever. But when you see it on like oil, it's like, it's a pretty eye-opening revelation. And then second, you're starting to see this like crypto FinTwit macro crossover that has been so electric to watch. And yeah, I mean, you're one of these accounts that, I mean, you cover this shit better than Fox News. Like, what do you think of just that whole like transition that we're seeing towards, I don't know, independent trader journalism, whatever you want to call it?
Yeah, I think it's the best thing ever. Like I just, I would say the other side of that argument of what you said there is people that get pissed off that when something happens, suddenly all of CT or the timeline becomes an expert in that thing, and then they get all upset, right? And they're like, oh, last week we were experts in this, and now we're expert in this trade of form
whatever. Yeah.
But it's like, I don't know. I've seen enough. I'm young, but I've seen enough of these over the years now to understand that, like, especially this cohort of crypto traders, I think it's so cool to see them moving into these other markets. And I like, you get the elitists that say like, oh, you have to be Pierre André to be an oil trader. Like, yes, there is a certain level of respect you need to give, but also like I've seen guys like yourself, or I don't know, like David or like Crypto Ethan, these guys who have been really great crypto traders and now are starting to experiment in macro a lot more, and are doing really well and are really good at digesting and looking for legitimate information effectively. Whereas like the boomers are just getting, distracted or thinking AI slop is real. But like we've like these crypto traders who have just been, they've been PvPing in the trenches against like people that have just been, extracting and that sort of thing for so many years. Are so war hardened that they have this skill set now that just naturally developed that they can apply to these other markets. And I think it's been really cool to watch. Like I am all for it. I think it's awesome.
One of the things I realized too, by the way, Crypto Ethan mentioned Mythical. One of the things I realized too is that like we're just like trading Trump vibes on a lot of the market. We're trading like, what is Trump going to say? And then figuring out quickly how much of it is real, how much of it is fake. It's like the market got wrecked strictly on this SPR announcement, which was obviously not significant when you actually like took a second and read it. And the thing crypto traders I think are the best at is like when you're trading garbage all day, you're just trading trash for the most part, especially on-chain memes. You have to be able to pivot really quickly when flows go against you, when news go against you, when announcements go against you. It's like your OpenSea, then tomorrow there's a better version, there's Blur, and it has a token, and it has no fees. Cool, your whole business just got uprooted in 1 second. And that's kind of what can happen, right? If you're like really short equities and then Trump rips a taco, and it's like, okay, brand new slate, completely new information. Like, I guess my question is, how sustainable do you think it is for these hyper online Twitter crowd to consistently be profitable just at being good at the hyper online game, like the base 16Z mega church thesis, which I reference a lot?
Yeah. I think it's only going to keep continuing. Like I've heard these same conversations back in like 2017, 18 when Wall Street Bets was sort of the place, and
Ah,
that was starting to come forth, and people
yeah.
were all pissed off back then for the same reasons, which is that like, look, you're just a bunch of retail scrubs. Like, you can't do this seriously. And why are you slinging and punting on options? Like, this is a sophisticated asset. Like, it's the same thing from back then. And people will be like, oh well, look at all these retail G-Gens doing these things. The Fed is way too loose on monetary policy. We need to hike interest rates, steamroll all the retail. But
Crush 'em.
if you look at what's happened over the last 10 years, is it's a steady increase. And there's certain folks like the people we've been talking about that have come through those and keep improving. And I think, it is also a bit of survivorship bias. Like, for every one person we talk about doing well, there's
Yeah,
20
yeah.
that have been steamrolled and are back to their day jobs.
Yeah, of
Like,
course. Of course.
but overall, I don't think that trend's stopping, especially as you get into this world of like, yeah, AI, AI psyops and what's going on there, and like fake information, like news driven flows. And suddenly, yeah, one of the biggest edges is just which Twitter account do you have on notifications for the recent squawks of what Trump is saying, and trading off that. Like, that's where things matter these days.
How do you like, maybe the oil thing was just a situational sort of coincidence, but right off the bat of this hot ball of money silver explosion, is this just going to keep happening that every like month or 3 months there's some new commodity or some new sector that is just like hyper focused, hyper liquid perps, option volume through the roof, and we just get these like, is this like a sign of end times, the end of the market? Like, what do you make of, is the silver and the oil thing at all related to like hot ball of money just like ripping commodities basically?
Yeah, I think what's happening is that we're in the beginning of a commodity super cycle, which like crypto traders took the word super cycle from commodity traders
Oh,
to
really?
explain when, yeah, where it's like,
Okay, okay.
because commodities are super mean reverting, because when you have something that can be produced quite easily depending on the price, like when it's highly sensitive to that, okay, price goes up, and suddenly miners that were not profitable at a $50, I don't know, barrel, suddenly at $100 they're profitable. So then you turn on those miners or whatever, and then that increases supply. And then once that occurs too much, you have too much supply, and then at higher prices, the demand falters, and then the price comes down. But during a commodity super cycle over a 10-year period, those mean reversions keep trending higher. That higher lows, higher highs. And I think what's happening is that there's one of the best commodity analysts out there is a guy called Jeff Curry. He was the head of commodities at
Oh, I
Goldman
watched
Sachs.
it. He didn't have a Twitter. What's up with that?
I don't know.
I
I mean,
watched
some of
his
those
CNBC or
real
something on
legends aren't on
stream.
Twitter.
It was
Yeah,
so good.
he's incredible. So one of the best commodity thinkers ever.
Okay.
And he's of that mind that we go through these 10-year cycles where commodities underperform and then overperform, and it's like, it's kind of similar, I think, in some ways to crypto, where what leads us to a bull market sows the foundations for the next bear market type of thing. So
Every
that kind
time.
of happens yeah, exactly. And so that happens in commodities too. And so I think we're undergoing one of those now for the next quite a few years, because we've just gone through a decade of underinvestment in commodities at the same time that everybody was all long software and that sort of thing. And then suddenly it's like, oh shit, we need a lot of commodities to be able to fund these AI data centers. We have shortages in like basically everything. And so I just think, yeah, we're starting to see these rolling bubbles. At first, I honestly thought that the trend of like hyperliquid HIP-3 TradFi markets was just going to be a flash in the pan, like a year ago. Or maybe like 6 months ago when the gold one was going off, before we even saw the silver one. But yeah, now I'm sort of like, if that's if the base case is a sustained bull market in commodities for the next decade or so, I don't see why these rolling bubbles of hot balls of money would stop.
The hyperliquid thing has been crazy. Bloomberg's writing about it. Wall Street Journal is writing about it every day. And I mean, there was a lot of money on the table that you didn't make if you were trading oil and you didn't have access to hyperliquid, especially in that first pop. Like, by the way, I trade crypto. You should trade crypto, not paying attention to equities. Trump announcements like, okay, cool, we're going to strike Iran. We're going to wait until right after market close on Friday, and then we're going to do it. Right? Like, that's not a coincidence. It's cool.
No.
Whatever happens, we have 48 hours to figure out how to solve it, right? Before Monday, or before, I guess, Sunday night, futures open. It's pretty crazy. Okay, a couple more. I'll let you go in a few minutes. Is like a lot of these guys that we mentioned, the Chumbawambas of the world, are also really bearish on macro and have been for a while. And I got a little bear pill there for a while, and I wasn't trading it, but I'm just thinking to myself, holy fuck, if I was actually a bear and I was running the numbers and doing the math and I had been bearish, I would be driving myself absolutely insane, just like losing my mind. And it's like, three tankers blow up in Hormuz, spies like down like minus 0.1%, just like nothing. What is your read on what period we're entering over the next, 3-6 months on probably like equities?
Yeah. Dude, it's tough to be a bear. Like
brutal.
I've said this many times that I almost never short anything ever. For me, it's either cash or long.
Cash or long,
sometimes
I
I'll
like
punt on little things. Like maybe I'll buy some puts here and there as like a partial hedge, but I'm always pretty much net long or just have more cash. And I think to me that's just, that's what I did in Liberation Day in April, is that I didn't catch the short, but I had a lot of cash to buy at the bottom. I think it's just it's really tough to be a sustained bear. You're fighting so many different things. You're fighting a literal president who wants to make sure assets go up at all costs. Like that's one. You're fighting the passive behemoth of just like people that get their paycheck and plug it into index funds every couple of weeks. You're fighting, options have just become hugely popular over the last few years, and with that growth, options now impact indices more so. So now, when you buy a call, there's an options market maker on the other side of that trade who's hedging that other side, and that has impact on the market. And if you have, whether it's like they talk about positive or negative gamma environments, and like if you're in a positive gamma environment, basically they want to keep price range bound, and anytime it goes lower, they will buy reflexively to hedge their books. And it's kind of the opposite in a negative gamma environment. So more and more you have options that impact markets overall. So you just you're fighting so many different things. It's really difficult. So even though thematically I probably agree that look, like if you look at the history of economies, you get a big oil shock like this, and most of them lead to recessions, 8 to 12 months down the line. But the hard part is the sequence of events.
It's to get there too, right? Like, how do you get there?
Yeah, to get there, because to get there, initially you have the hawkish reaction because oil up, inflation up, and then central banks have to be hawkish into that. And it's only afterwards that happens that you get the demand destruction and the recession. And then throughout that whole time, like we've been seeing over the last few weeks, my belief that the reason we haven't seen markets go down that much is that nobody wanted to actually sell their books. They just bought puts to hedge it. And they were just hoping that, okay, I'm going to hold these puts and then I'll make some cash on it. And then I'll keep my longs. Yeah. But when everybody buys puts at the same time, everybody's hedged, and then you don't get that move lower. So put skew super elevated. So it's sort of, because it's an interesting contrast to show that against these information games on Twitter these days now, where everybody gets smart to the next thing really quickly, but because everybody does that at the same time, the dynamic of that reflexively makes it so that it doesn't happen, if that makes sense.
It makes perfect sense. Yeah, that's actually that's very interesting. I've seen all these charts of the put skews are like all-time high volume, like all-time high size, open interest, whatever the metric is. I also felt this feeling in a like a really small circle where I'm long it, insignificant to the world amount of oil, and I'm like, all right, every single force, those powerful people in the world are actively trying to kill me right now. Like with every lever they have, they're trying to kill me out of this trade. I'm not gonna make it. Like I originally had like high leverage, low size, and I'm like, bro, I'm just not gonna make it. If I want the trade to play out the way I want, I'm just not gonna make it there, because like Trump, Besson, everybody, Pete Hegseth, scary ass, everyone's trying to kill me on this trade, and that's like the stock market.
Yeah. So to answer your question, like, what am I doing in that in that respect is I'm just mostly in US dollars and cash. Like I have some punts on different thing, like, you know, a long like a fertilizer stock or like some natural gas producers.
What
just
stock?
like kind of random. I'm not saying this.
Okay. It's like 50 mil market cap.
No,
Okay.
yeah.
Okay.
You get, but you know, little things like that, but mostly just in cash and waiting. And you know, if we get to the other side of this and everything's all good, I don't mind buying a little bit higher. Or you know, maybe we go a little bit lower and then I buy there. But I don't have a good idea of how long this takes on. And I know that typically the situation we're in, where the economy was in a bit of a rough shape into a global oil shock, is just like a really bad combination. And I think it's hard to predict the sequence to get there. So I'd rather just wait for it. And if it happens, sweet, I got a bunch of dry powder I can buy. Or if everything resolves itself, then I don't know, I'll just buy a little bit higher, but like whatever.
Yeah. Okay. Basically, the last thing I want to ask you, I know you said you don't have a ton of a take on it, so you give me surface level, but are you concerned about private credit right now? Everywhere I look, I'm seeing doom, gloom posts about private credit is going to blow up the stock market. Is this something that you are actively concerned about and or trying to learn more about, or is it kind of like it's contained into this one subsect that it's not that big of a deal?
Yeah, it's definitely a risk, but I would say it's a much smaller risk than the impact of something like this oil shock. I think that's like way, way, way bigger. So yeah, it's not great. You know, we've seen like everybody just got stuffed to the gills in private credit over the last few years, and now suddenly it's just like it's a classic scenario where redemptions are being frozen at the same time that, like, if you look at what a lot of these yeah, like these BDCs that have been issuing these loans to is like mostly software companies. And you know, we forget about this, but just a month ago we were all freaking out about software and the AI Chumbawamba thesis, right? Like that was what we were freaking out about a month ago. But that's like a huge exposure to private credit. You know, that's where they operate. And you look at like Blue Owl, like they are the one that are providing private loans to Meta to fund an AI data center and that sort of thing. So yeah, like it's all very closely tied together with a lot of leverage. I would say like the most interesting thing to me around that whole situation is, okay, typically when you get these, you know, if we get the classic sequence of events that lead to a recession, typically what you see is credit spreads going higher.
Okay.
So like risk of default in companies going higher.
Okay.
And typically it's like the high yield, you know, like HYG is a ticker you can look at for an index of high yield credit.
HYG.
There you go.
Thank you.
And so that's like they're also called junk bonds. So it's the more riskier companies. But what's happened is that a lot of those really risky companies now use private credit instead. So they don't issue their own junk bonds in public markets anymore. So the really degenerate stuff doesn't get marked in terms of their credit spread live anymore in something like HYG.
They just hide it.
Instead, they all hide it in private credit. So, you know, you see the situation where high yield credit spreads are pretty tame compared to some of the stuff that we've seen through. And I think it's because a lot of the really risky degenerate stuff is hiding in private credit now.
Good to know. Okay, actual last topic you have to answer before we leave is crypto, Bitcoin, and specifically Stretch with strategy. Are you where are you on Bitcoin right now? And just like crypto in general?
I like Bitcoin. I think it's I mean, it's looking like we're starting to break out again. To be honest, I was like bearish on it a little too early. I think definitely got invalidated in that regard. Like I thought it would come down with everything due to this oil shock, but didn't really take into consideration one that it sold off before everything already.
True.
So, you know, it's this classic scenario where there's just like there was no more sellers.
No, there was nobody left.
We had destroyed so much leverage. There wasn't many sellers left, and I didn't consider that enough. And then at the same time, he's starting to have this like Sailor Stretch thing coming online more and more so, which has also been really interesting. I don't know. I don't have like a really good take on whether Stretch is a Ponzi or whatever. Like it just seems like the next thing that everybody's going to debate about for the next year or so. But the fact of the matter is that it keeps reaching 100. It keeps reaching par again
every time.
So there's obviously demand for it, and then that's going to be demand for Bitcoin. So, you know, if you have that plus no more sellers, feels like all you really need is a good narrative. That's probably the most missing thing right now. Like the only real narrative is Sailor's still buying it. I don't know, maybe the whole gold had its run and now it's going to rotate into Bitcoin. But yeah, I mean, this is the whole thing with these cycles of crypto is that the narrative comes once the price goes up. Like people look for a good
Always.
narrative and think the price is going to go up, but it's like the price is going to go up and then, everybody's going to find a good narrative.
Then
So
we
maybe
tell
we're
a
just waiting for
story.
the next narrative. Yeah, exactly. But then I think aside from that, like altcoins are still a bit lost. Like they're
Agreed.
I think it's really important to solve the legal merits of altcoins. Like, do you have a claim on cash flows
I
and
fully
equity and that
agree.
sort of
You've
thing?
had good posts about
Yeah.
this, by the way. You had really good posts about this.
Yeah, thanks, man. I mean, you see it like some of these ones that like Morpho's done really well because they are somebody who's actually at the start of the gate blended equity and token ownership together. So I think the market is rightly validating people and rewarding people that are actually solving these problems, and then tokens that are just a useless governance coin with no claims on anything are just down only and being sold by like VCs every week. And it just seems like we're going to be in another year of churn of that. And so, I mean, that's great for people that can identify those coins that are actually fixing those equity structure issues and longing those and then shorting the useless governance tokens. I know there's been some really great trades like that over the last year, and I would probably see that continue.
I think it's a good take. You should keep posting about this equity token cash flow problem as well. Because like somebody has to solve it. I don't feel like there's really anyone. There's like a couple people working on it, but it doesn't seem like anyone's taking it that seriously still.
Yeah, I mean, there's versions of it. I mean, just to show a little bit of what we're doing at Blockworks, like that
Please.
is a big initiative for us. Is that like investor relations we're going deep on because we think that if you can actually get those disclosures out there and people know what they're investing in and what their rights are, that's just better. Like we need to solve that before we see the industry actually grow up and mature. So I mean, there's people and there's other companies working on that as well. So I think it's going to get there. It just takes time.
Hey, what is the origin story of your name? Phage out. What is that? Did I say it right?
Fijao. It's just a combination of my first name and last name.
Oh, it's Phage
Like
out.
Felix is the first part.
Okay,
Yeah.
okay,
Yeah.
sick. Everyone in our company, we're like prepping to have you on. Everyone like says it differently. It was like Fajao. My Claude
yeah.
bot like said it differently. Like everyone was saying it differently.
It's such a funny one. It's just like one of those, like it was my Xbox gamer tag. That's probably where it began. And then it's just like one of those things. Yeah.
Yeah, the original Xbox.
Yeah.
No, dude, I appreciate you coming on, man. Seriously, I actually mean it. I think you and amongst a couple other accounts in our little, it isn't even CT anymore. We're FinTwit. Fuck it.
Whatever it is. Yeah.
Have just done an exceptional job of covering, and you're earlier, you're more accurate, and you're just like better than traditional news outlets. So I have high respect for what you do. I think the podcast is incredible, and I always appreciate you coming on, dude.
Sweet. Thanks, man. Likewise. It's cool to see you broaden out, and I'm sure people give you shit about being a macro guy a little bit, but like I think it's just awesome. It's super cool.
I mean, you got to get there one way or another, right? You got to look retarded at some point. So fuck it. Let's just like rip the Band-Aid,
Exactly.
Yeah.
I fully believe in that. And just like being upfront about the stuff you don't know. Like I said, like I'm not an expert in futures markets of commodities. Like I'm doing my best, but like there's smarter people out there.
Hey, Zhao, you're the GOAT, man. Thanks for coming on again, dude. Hopefully we can do
You
it
too.
again at fucking 100K Bitcoin or something.
Sounds good.
All right, bro. Have a good one. Peace.
Yeah.
I love that guy. Okay. We don't have to panic about private credit. We should panic more about oil, he says. I like how he's just like, yeah, you guys could just trade this shit. Like, well, the crypto people are just like, we don't bring a lot of guests on anymore because I think most of them suck. Honestly, I think they mostly suck. He's one I would bring on every day if he wanted to come on every day. And he's like, yeah, crypto guys are just like prepared for this. You guys can just trade it well. Yeah, crypto guys can just trade this stuff well, very well, which I feel like we've seen. Bring me on low key. Why? Why should you come on? Why? If you had a sick reason, I'd bring you on. Actually, if you could like make like a good argument. Because I'm gay. Yeah, all right. You and the rest of fucking CT. Should we finish this video on the risks of stretch? It's 5 minutes. Should we watch the risks of Taiki stretch on 1.5? It's a decent answer. Do you want to watch this? Bring back Thicky Thought at some point. I think we should watch this. Let's talk about this. Let's watch it. Let's watch it. Let's watch it.
And, crypto hasn't even gone lower. So, there's like really some relative strength there. Risks, obviously there's risks. I'm sure there's like warning signals in your head, right? It's like, oh, this sounds like Luna, UST. And
I'm going to get up real quick.
it's not,
I'm listening.
It's not, it's kind of like apples to oranges, right? It's not like same. However, it is a good framework to think about how this could go wrong. Of course, Luna had this.
So everyone spams this is Luna, or like this has risks, but I haven't seen a lot of well thought out explanations as to why it would happen.
Mechanism with USD. So there was like this doom loop where if USD goes below $1, then there's like this infinite Luna that gets minted, and then this thing goes to zero. That's not the case for Stretch. Even if Stretch goes below 100 due to market forces, that's fine. The way this ends poorly is if Bitcoin stays in, let's say, a 2-year bear market, right? Because they have 2 years worth of dividend payments, and Saylor just depletes his cash reserves. He keeps buying Bitcoin, and Bitcoin just doesn't do anything. At that point, he might have to sell his Bitcoin to meet his liabilities. But then again, that's not something we have to worry about right now. This is like why I think that we are in the early capitalization of this Ponzonomic flywheel. And I'm not really worried about this, even though it could happen, right? So it's good to be aware of this. I don't think anyone should be like too bullish, a stretch in like allocating your life savings into it. But it's something to at least consider. And also, Peter Schiff had this comment today, I think, where if you keep this pace up for another year, you're going to waste another $80 billion buying Bitcoin and make all the whales who sold you theirs much richer, which could be true, right? He might just be exit liquidity for existing holders because he's signaling to the markets that he's going to keep buying. And if you just study the chart of Stretch, right, you can kind of see when he's buying, because if it's trading over 100, that's when he's buying. Sure, but also, I'm a recovering mid-curve, and I think it's a mid-curve take, right? Saying that Stretch is a Ponzi and it's going to end in tears, maybe you're going to be right, but the better question to ask yourself is, how can I make money off of this, right? What does this mean for the price of Bitcoin, the price of other coins? And what does that mean for the future outlook for crypto over the next 12, 24 months? And what I think is, even if it does end poorly, like end in tears, if Stretch gets too big where that's a problem, that's going to be pumping Bitcoin in the short to medium term. And I'm not essentially making a bet that this will collapse or something, right? I'm just making a bet that Bitcoin's going to go up because this is a compelling product in the short term. It's a pretty simple trade. Does it make sense to long Stretch Bitcoin? It's up to you, right? Ethereum, I don't know, but I choose to long Bitcoin. The bull case for ETH though, right, is imagine.
Cool. I like it. Chat, I think, well, this is what oil looks like. Cyrus NFT. Kyle Soska. Shout out to Kyle. Wrote out best how to kill MSTR via STRC thread. We'll have to pull that and read it at some point. Oh, by the way, a couple references he mentioned on the interview. What's good, Cyrus? What were their names? What was the names? Oil trader that blew up was who? Pierre and Durand. Fund blew up oil. Endurance oil hedge fund crashed after oil prices bet goes array. After a wildly successful period amid soaring oil prices, legendary oil trader Pierre has seen his hedge fund suffer their worst loss ever. It fell by another 7% of the current month to bring year-to-date losses to 51%. He runs a fund with no set risk limits, has suffered catastrophic losses. Earlier this year, predicted that oil prices may exceed $140 a barrel. Wow. Is this accurate? What was the last interview, by the way, that I was supposed to watch? What was that guy's name? Hey, somebody sent it in the chat. I'm blanking on his name now. That wanted to switch the petrodollar to gold. Yes, Gaddafi. The last interview, is it like dark? Should we watch it? Gaddafi. last interview. It's long as fuck.
This is the last interview of Muammar Gaddafi. A few days after this interview, he was martyred.
No demonstration at all in the streets. No one against us. Against me for what? Because I am not president. But they love me, all my people with me. They love me all.
But if they do love
they will die to protect me, my people.
If you say they do love you, then why are they capturing Benghazi and they say they're against you there? Why are they in Zawiya?
It is a guide. It is guide, not my people. It is guide. Guide, yes.
Colonel Gaddafi, the President of the United States, the leaders of Britain and other leaders are calling on you to step down, to leave Libya, to leave your position of power. Will you do that?
Who would leave his homeland?
Okay, we didn't get much from that. All right. Chat. Vanity Fair dropped an article today titled Crypto's True Believers Demand to be Taken Seriously. Here it is. They partied like rock stars, searched for aliens, practiced survivalism, and sometimes showed up without shoes. Then crypto winter came, and they lost billions. Here are the representatives of the crypto market. Number one, Olaf, the Bitcoin playboy. Number two, Mike Novogratz. By the way, when I have my ascension, I'm not mad at it at all when I have my ascension. Read the captions on the pics. When Carson Wee's not running one of crypto's largest hedge funds, he can be found jetting to the United Arab Emirates, where he was recently spotted beach blonde on a mega yacht celebrating Token 2049, a far cry for a preacher's kid. Second, Mike Novogratz, the Wall Street rebel. He can be found at the Strait of Hormuz, Token 2049. Michael Novogratz, the Wall Street rebel. Before he became a multi-billionaire, Novogratz felt the distance between his world and his college roommates. He remembers emailing his mom, quote, "Rich people's sheets kick the shit out of our sheets," he says. 3. Meltem, I don't even know how to say her name. Demors. That's it right. Meltem. The Couture venture evangelist. The Crucible Capital founder judges potential investments on a sliding scale of Riz and Tiz, charisma and autism. Stop. That's not a real quote. The Crucible Capital founder judges potential investments on a sliding scale of Riz and Tiz. Quote, "Here's the secret to lasting a really long time. You become the main character. Everybody knows who I am, but nobody really knows why." Chat, yes or no? You know who she is? Yes or no? Be honest, yes or no? I need 151 answers. You know who she is? Yes or no? Riz and Tiz. I know. I know of her, but I don't really know why. She's the atoms over bits originator. No, she is not. Stop. Danny Ryan, the barefoot builder. She invented 0 to 1. Isn't that Ben Horowitz? Bro, she did not invent. Why does everyone just freak out? Didn't this guy invent 0 to 1? Okay, well, Ben Horowitz wrote the book. I mean, that's a reasonable poll that I just whipped out. Come on. Oh. Wait, what did he write? Hold on. It's like, I am tripping. What did he write? Oh, the hard thing about hard things. Yeah, whatever. That's close enough. Danny Ryan, the barefoot builder, running Etherealize, a company attempting to bring Wall Street onto the blockchain. Has Ryan spending his days talking to men in suits, which is an adjustment from his old gig designing apps for a duty-free theme park on the Mexican border. Kathy Wood, the market prophet. Look, all love to Kathy Wood, but I got to do it. I have to do it. I have to do it. Oh, it's actually not bad. It's actually not doing bad. It's actually not doing bad. Respect. The market prophet. Shout out to Kathy. Woods Exchange Traded Fund ARC is named after the Ark of the Covenant, the gold-covered chest described in the book of Exodus that carried the 10 Commandments. She has also been crowned the best stock picker in the market in 2020 and the worst in 2022. Last but not least, former guest of the threadguy stream, Devin Finzer, and I believe his wife, Yuchi Lyra Koo. The Build-A-Bear and the product mommy. When's Felix come out? You just missed him. Finzer met Koo just as his NFT marketplace OpenSea was approaching a $13 billion valuation. I crashed a New York Fashion Week party that she was hosting at her penthouse, says Finzer. It was like all these crypto OGs, and she was just brilliantly immersed. 5 years later, the two are relaunching OpenSea, which cratered in 2022 together. This is crypto's Vanity Fair, and Devin Finzer gets a feature immediately after announcing that OpenSea token is delayed again. Chat, it's never going to come out. I mean, I don't even want to talk shit about crypto companies anymore because what's the point? What am I going to say about OpenSea? Like, what am I going to say about OpenSea? Seriously, what am I going to say about OpenSea other than we don't want it? I mean, what am I going to say about OpenSea that you haven't already heard a million? Like, what am I supposed to say about OpenSea? I mean, yeah, it's a dumpster fire, dude. But is it their fault NFTs are dead? No, I don't think so. But you got to admit that the timing of that article is hilarious. Immediately after announcing the delay of their token. What did they raise at in 2018? All that I know is that I think there was a round raised at like $1 billion in 21, and it was marked up as much as 15. I think $13 billion was the top. And I know a lot of people didn't sell that seed, or like were like Series A or whatever, up 13x at a B, at 13B, and didn't sell, and walked away with nothing. I don't think it's like worth zero, but I mean, it's not worth a lot. By the way, here's where we currently stand with crude oil, my friends, my dear friends. Here's where we stand with crude oil. You think oil is a good short? Absolutely not. I wouldn't touch it. I would either be long on the thesis that this is at 62% and the ceasefire is dropping ridiculously, but I would not be short. I just wouldn't. I wouldn't be short. I don't know enough about oil to like trade this effectively. I got like a good entry. I got a good entry that I can sit in like comfortably, but shorting it feels like a mistake. Also, yeah, we do have FOMC tomorrow. I think nothing is priced in for tomorrow. I have a video I want to watch, by the way. Do you want to watch this video? It's in my likes, and it keeps playing. Do you want to watch this as an outro? This is the intro to it. Remember this video?
Economy was never the AI bubble. It was never China, and it was never the orange man in the Oval Office. It's something much more boring, and it's something you've likely never heard about, unless you've gone deep down the finance rabbit hole.
You want to watch this? Are you down? I kind of like don't want to work stream. I have some energy. Right? By the way, real quick, just to shout it out, is Phantom, our favorite Phantom, just made this announcement today that they secured CFTC no action relief for access to regulated derivatives and events contracts. We haven't had Phantom on in a while, and we should have them on soon, but Phantom is actually becoming a super app. Just like the way we talk about Hyperliquid, we're like actually approaching a future where Phantom is the one-stop shop for all of finance. Anything that you want to do, anything that you want to buy, long, short, spot, sell, you'll be able to do within Phantom. Phantom Cash is rolled out. Also, stablecoin ticker physiognomy is the greatest of all time. And it's pretty impressive how much Phantom has evolved from just being a Solana wallet to becoming everything. So sick announcement. Brandon, who runs Phantom, doesn't usually show a lot of announcements, but you know when they do, it's a fucking good one. So shout out to Phantom. Let's watch this. Let's watch this. Hey, let me see some W Phantoms in the fucking chat. Let me see some W fucking Phantoms in the chat. Is what I want to see. Let's watch this. 1.5x.
The biggest risk to the United States economy was never the AI bubble. It was never China, and it was never the orange man in the Oval Office. It's something much more boring, and it's something you've likely never heard about, unless you've gone deep down the finance rabbit hole, and that's exactly why nobody's paying attention to it. Because if you've been wondering why mortgage rates refuse to fall, why stocks randomly freak out every few months, and why the Federal Reserve can talk about cutting rates but financial conditions still feel tight, the answer doesn't start in Washington. It starts in Tokyo, and more specifically, in the most boring asset on Earth, Japanese government bonds. Because the country best known for attracting American weebs has also been the duct tape quietly holding the global financial system together for the past 30 years. And that duct tape is starting to peel. But to understand why Japan is so important, you first have to rewind to the early 90s. Because 30 years ago, in 1992, Japan's asset bubble burst, real estate collapsed, equities collapsed, and
We learned about this.
Japan entered what became known as the lost decades. It was a 3-decade-long period of being financially f***ed. There was no real growth, no inflation, and no wage expansion. It was like the economy hit pause, and nobody could find the remote. So the Bank of Japan did what central banks do when they're out of options. They cut rates to zero, and then they cut rates below zero. And then, when that wasn't enough, they introduced something called yield curve control, which sounds like a Marvel villain, but actually just means we're going to cap long-term bond yields, whether the market likes it or not. Basically, the Japanese government superglued interest rates to the floor. So for decades, Japanese government bonds yielded pretty much nothing, and that created massive problems for Japanese investors. Because imagine you're a Japanese life insurer, pension...
I watched this video about this documentary about the Japanese bubble in the 80s, and it got so agreed. There was this, they called it window dressing, I think, where banks were required to give out X amount of money. Was it called window dressing? They're required to give out X amount of money in loans annually. And they wanted to stimulate the economy and fucking catch up to the US. And so they're required to give X amount of money. And then every year they would increase the amount of money. And eventually the banks were like, guys, we don't have any other applicants to give this money to. We have no one else to give the money to. And they're like, figure it the fuck out. So when you have no one else to give good loans to, what do? Well, you give bad loans. You give good loans to bad people that don't deserve it. And they just were fucking... Oftentimes, people will get more money than they asked for. They were just ripping money into the economy. And then they made this law that there was no... If you were a company and you were trading stocks with your balance sheet, there was no capital gains. And so everyone was getting these basically free loans with no interest, more than they asked for, and they were ripping them into stocks that were going up only because everybody else was ripping them into stocks. And the biggest companies in Japan at the top, like Toyota and these other companies, were making more money speculating on Japanese stocks than they were manufacturing cars. Like, there was this take I read that the land surrounding Tokyo, like the real estate surrounding Tokyo, was worth more than I think there was like I'm gonna fuck this up. There was a multi-mile radius around Tokyo that was of real estate that was worth more than all of California, and Tokyo itself was worth more than the entire United States of America at the pico top of this bubble. Like, it was fucking insane. Up only. And then boom, they fucking hiked rates to a ridiculous percent, like 5, 10%, 15%, jacked rates in everybody's face, destroyed the economy. And then to like re-stimulate, they sent it back to zero. And everyone in the US has been ripping this Japan yen carry trade for the last like 30 years. Princes of Yen is a good book on this. Damn, Thread really knows his shit. I know a little bit of... The stream makes me knowledgeable. I know a little bit about a decent amount now. Let's see. Ginza was worth 10x the whole NYC at the time. Yeah, it was fucking insane, bro. I couldn't believe what I was listening to.
Fund, or even a bank. You have $1 billion investment portfolio, and your domestic government bonds are paying you 0%. This pretty much leaves you with two choices. 1, accept no return on your cash, or 2, go shopping overseas. And they chose option 2. So Japan entered a multi-decade-long global shopping spree that led them to become the largest foreign holder of U.S. treasuries, one of the largest buyers of U.S. mortgage-backed securities, and the world's largest net creditor nation, which is just the formal way of saying Japan became the world's ATM. And it's not because Japan just loves sending capital to America, but it's because the math made sense. And here's how it worked. Meet Bob. Bob wants to start making some money through investing. So Bob...
Wait, oh, it just got crushed. Hold on. Is there a headline? No. Monitor.
Goes to the Japanese markets and borrows money in yen at near zero interest rates. Then Bob converts that yen into dollars and buys U.S. treasuries that yield 4%. And after hedging costs and fees, he pockets the spread. And that's what became known as the yen carry trade.
Bro, do you understand what he just said? Listen to this. How fucking ridiculous this is.
largest foreign holder of U.S. treasuries, one of the largest buyers of U.S. mortgage-backed securities, and the world's largest net creditor nation, which is just the formal way of saying Japan became the world's ATM. And it's not because Japan just loves sending capital to America, but it's because the math made sense.
Listen to this. Listen to this. Listen to this.
And here's how it worked. Meet Bob. Bob wants to start making some money through investing. So Bob goes to the Japanese markets and borrows money in yen at near zero interest rates. Then Bob converts that yen into dollars and buys U.S. treasuries that yield 4%. And after hedging costs and fees, he pockets the spread. And that's what became known.
You could buy stretch. Imagine borrowing yen at 0% interest and then ripping it a stretch at 11.5.
As the yen carry trade.
And then taking loan out against your stretch to borrow more money in Japanese yen and then buy more stretch. And then
Investors would borrow in yen at near zero interest rates and then invest in foreign assets that yielded higher returns. And when investors' borrowing costs are near zero, they don't just buy treasuries. They buy tech stocks, they buy real estate, and they buy into emerging markets.
Well,
Basically,
it's
if it's got a pulse and it yields more than 0%, they'll buy it. And that's why for years, this trade became one of the largest sources of global liquidity. At its peak, the yen carry trade was estimated by some banks to be in the trillions. It was like the global markets were running on Japanese Wi-Fi. But the problem was that the entire trade relied on one assumption that held everything together, that Japanese yields would stay near zero forever. But in 2024, that assumption broke when the Bank of Japan ended its yield curve control policy, and Japan raised interest rates for the first time in 17 years, and then they raised them again. And immediately following that second rate hike decision, the S&P 500 dropped 6%, and Japan's index, the Nikkei 225, plummeted over 12% in a single day, marking its worst drop since 1987. It was a clear signal that markets were officially spooked. Because when Japanese yields rise, two things happen. One, borrowing in yen becomes more expensive, and two, hedging currency risk becomes more expensive too. And suddenly, the free money trade isn't so free anymore. And that 4% US Treasury Bob was looking at doesn't look so good anymore. And this was the beginning of the end for the yen carry trade. Because now the math had flipped, and the trade was no longer a no-brainer. And when the math flipped,
imagine if we knew what we knew and we were like, imagine I knew what I knew when I was old enough to do this like 10 years ago. What?
the capital flows flipped too. And the money that flowed out of Japan for decades was starting to...
I would be so fucking tits leverage that you would see a crash in markets that you didn't even think were mathematically possible.
Return home. And this is what's called repatriation, and it's one of the biggest threats in global markets today. Because investors are starting to realize the uncomfortable truth. The cheapest source of global liquidity for the past 30 years is no longer cheap. But here's why it actually matters. Because for decades, Japan wasn't just some random buyer of US debt. They were one of the most consistent, price-insensitive buyers of long-term treasuries. And the yields on those long-term treasuries? Well, they aren't set by Jerome Powell. The Federal Reserve controls short-term rates. But the 10-year, 20-year, and 30-year? Well, those yields are largely determined by supply and demand. And the problem is, everyone's staring at the wrong lever. And here's legendary investor and founder of the world's largest hedge fund, Ray Dalio, to explain it.
Watch the bond market. The bond market is the basis, it's the backbone of all markets. It is the risk-free, meaning default-free, probably default-free.
Ray Dalio has called all 5,000 of the last 2 recessions. It's like, nah, he's goated. I can't lie, twin.
Interest rate that determines what all asset returns are going to be. And when
he's the
there
goat,
is a breakdown of the
so
supply and demand picture for the bond market, you see a certain type of market action. You see long rates rising relative to short rates. You see the currency go down. You see gold go up because there's a movement out of that bond market because there's a supply and demand imbalance. When that happens, that raises interest rates. And it puts the Federal Reserve and other central banks in a bind.
So while everyone is hyperanalyzing Jerome Powell's press conferences like it's a new GTA 6 trailer, they're looking at the wrong end of the yield curve. Because while the Fed has some indirect influence on long-term rates, what they really control is short-term rates, the overnight rate. But the long end of the yield curve is driven more by supply.
Guys, first time chat to say raise a plant.
And demand. And when you add in the fact that the United States is running trillion-dollar deficits annually, even a slight reduction in demand matters. Because the Treasury has to issue massive amounts of new debt every year just to keep the lights on in the economy. And as this debt issuance keeps growing, someone has to absorb it. And for the last few decades, Japan was a key part of that absorption machine. But before I explain why if Japan backs out, we are totally f***ed. A quick pause, because this video is sponsored by Gamma. I personally use Gamma because the hardest part about creating finance and to Gamma for sponsoring this video. Now back to how Japan might f*** our economy. Because if one of the largest historical buyers of United States Treasury stops buying, then yields have to rise to attract new buyers. And that's how supply and demand shape long-term bond yields. But that's also how you can get a situation where the Fed cuts the federal funds rate, short-term yields fall, but long-term yields stay elevated, and that's how you get what's called a steepening yield curve. And if this happens and long-term rates stop cooperating, then it stops being just a bond market story, and then becomes an everything story. Because when analysts build models to value stocks, they discount cash flows using long-term yields as a baseline. And when long-term yields remain elevated, the present value of future cash flows in these models decreases, which means valuations compress and stocks trade at lower multiples.
That's actually a sick take. Tether will buy what Japan won't. That's stable coins. Yeah. New buyer has emerged.
So even if earnings are fine, the price investors are willing to pay for those earnings changes. And that's why markets can suddenly feel unstable, even when the headlines look calm. But it doesn't just stop at the stock market, because the 10-year treasury yield isn't just some nerdy number on Bloomberg. It sets the price of money and is the foundation of nearly every asset valuation. And mortgage rates are another example of this, because, like stock valuations, mortgage rates are largely anchored to long-term treasury yields. So if the 10-year yield doesn't meaningfully fall, mortgage rates don't magically drift back to 3%. So the Fed can cut the federal funds rate all they want, but if global demand for treasuries weakens, then the long end of the yield curve stays pinned. And when that happens, mortgage rates stay high, housing affordability
I started watching your stream like a week ago. I really like it. Why do you like it? Why do you like it? Thank you.
stays strained, refinancing activity stays muted, and home transactions slow. But it's not just mortgage rates and equity valuations, because if you zoom out even further to corporate credit, it's the same story. If you remember back when capital was cheap in 2020 and 2021, when rates were suppressed, companies were issuing debt like it was Black Friday, and interest rates were 90% off. And when companies have access to cheap financing, we see increased deal flow, higher valuations, and more activity. And that's because credit is the bloodstream of the corporate world. But if borrowing costs stay elevated, we see the opposite. We see risk appetite fall, growth slow, and capital tighten. And this is the main point of the video, because for 30 years, the United States benefited substantially from being on the receiving end of the world's largest carry trade, and now that trade is unwinding. And as Ray Dalio said, the bond market is the backbone of all markets and the interest rate that determines what all asset returns are going to be. And what we are currently seeing is a tangible catalyst reshaping the foundation of the bond markets. And there's a reason why traditional financial media is ignoring this. It's because it's not clickable, and because it wouldn't trend on Twitter. Nobody wants to hear, let's discuss the cross-currency carry trade and how Japanese institutions are reallocating capital, because that requires patience and nuance and more brain cells than doom scrolling allows for. Instead, people want inflation, they want AI, and they want whatever Nvidia did last week. They want the topics that are visible, loud, and create headlines. So instead, the narratives become dramatically oversimplified to, if the Fed cuts rates, financial conditions will ease. And that's not necessarily true. And that's the lie we're being sold, that one rate cut fixes everything, that liquidity is automatic, and that someone, somewhere, will always show up to buy our debt. But what if they don't? And what if the largest foreign holder of US Treasuries decides to take a step back? Well, then you see global liquidity tighten, and liquidity is the oxygen in markets.
Stablecoin, like, okay, so basically saying that we don't have a marginal buyer of our bonds anymore because the yen is dead. Is it actually just stablecoins getting approved? Is it actually just stablecoins? Infinitely bid bonds forever? This is what I've been saying, yeah, but I never understood it. Huh. Who knew that was a thing? That's fascinating. Wow. What are the size of... How do I even... okay, wait. Okay. I know exactly how to do this because we have the all-seeing, all-powerful AI that can do everything. Roughly how much money was being spent on bonds, on buying bonds from the yen carry trade. To the oil trade, I can relate to how you were thinking about the trade. Couldn't find anyone else. YouTubers, friends who I could discuss it didn't think that was crazy. Big position from the oil trading commodities. Star-Lord, welcome to the show, baby. You're gonna have some fun here. Whoa. About 10 to 20 trillion. How much can Tether spend buying bonds right now, 26, and including year-over-year growth? Holy shit, I get it now. I fucking get it now. This was Good Alexander's thesis too, right? Oh, I get it. I get it. Ooh, we got a long way to go. Oh my God, they have to rip stablecoins. Oh man! Wow! Wow! Okay, wait. So the yen carry trade is dead now, right? That means a huge buyer of our bonds are gone because they jacked rates. If that buyer doesn't get replaced, what happens to U.S. economy? Wait a second. It's not dead. Less demand for treasuries. No one wants to buy our debt. Okay. Wait. Yields stay structurally elevated. 10-year doesn't go back 2 to 3%. This reprices every long duration asset. Housing, growth stocks, private equity. It's not a crash event. It's a slow suffocation. Before we talk about replacing, let's just assume yen carry trade is dead and there's nobody left to buy. What happens to economy? Whoa. Yields spike hard. Mortgage rates follow. Housing market seizes. Nobody sells. Nobody buys. Whoa. Government interest explodes. Oh, the interest gets so bad. Private equity is uninvestable. Sovereign debt spiral. Okay, wait. So now enter stable coins. Whoa, stable coins are obviously the next marginal buyer to replace. So basically the economy's cooked. Interest rates get so ridiculous. There's no one to buy these bonds. Bond yield, long dated bond yields go crazy. And then nobody can afford to borrow anything. Stimulation in the economy gets fucked. Money stops transacting. I have that right? Like, let's assume there was no one came in to buy the hole that's left of the carry trade dying. Yields go crazy. Nobody can afford anything. Nobody can borrow money. Stimulation, growth stops. Expansion stops. Do I have that right? I think that I do. Then, how much buy pressure do they currently provide and to bonds, and what has to happen for that to get to 10 to 20 trillion? Wow. Oh, they passed the Genius Act. Yeah. Okay. So Tether does 150. So they do like nowhere close. The Genius Act is legal stable coins in the United States of America. So we basically have to 100x the stablecoin supply. So we have to 100x the stablecoin supply. Is that why the Genius Act was passed? And what are the trades there if this happens? We have to 100x the stablecoin supply to buy enough bonds, because that's how they make money. That's exactly why. Oh, we're connecting dots. U.S. government has a bond demand problems, and stablecoins are the most elegant solution they've ever found. Oh, threadguy from the rafters. You get a private sector entity that must by law buy your debt. Funded through global dollar demand, and it requires zero government balance sheet expansion. It's a backdoor QE mechanism that doesn't show up as money printing. Because instead of the government buying fucking bonds with QE, keeping rates down, yields down, expansion high, stable coins do it because that's how they fucking get rich. Ho! Fajo, come back! The Genius Act is fiscal policy disguised crypto regulation. Trump admin isn't pro-crypto because they like Bitcoin. They're pro-stablecoin because they need buyers of treasuries. As China, Japan, and others reduce exposure. Wow. Stablecoins are a replacement mechanism. Oh my God, I get it. Scott Bessent understands this. I fucking get it. The trades. Circle, Coinbase, Visa, MasterCard. Oh, wait. What did MasterCard do today? I don't know. How about acquired stablecoin infrastructure startup for $1.8 billion? Oh! If stablecoins 10 to 50x and become structural treasury buyers, Long end yields stay more controlled than the bear case suggests. Why is it good for the economy if long yields stay down because stable coins are swapping bonds? Wow. Oh, wow. Oh, wow. Long yields are the price of money for everything in the economy. Mortgages are cheap. Corporate debt is cheap. Government interest expenses stay manageable. Equity valuations stay elevated. Dollar doesn't spike violently. Wow. So, how do we print 100x more? I guess, stable coins. Chat, I fucking get it. I 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 fucking get it. Yeah, they get minted. You know what I meant. Global dollar reserves coming on chain. Oh my God, BlackRock tokenized everything. Emerging market adoption, banks issuing stable coins, tokenized market money funds, BlackRock. Oh my fucking God. Chat, I get it. 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 Wow. Wow. Oh, wow. Oh, wow. What happens to Bitcoin price? Also, yeah, Buildle, which we had the fucking securitized guy on. Mocha, what's good? What happens to Bitcoin price if we mint 100x more stable coins? Wow. This is why they need to get clarity passed. Directionally up massively. Stable coins are the primary armament of crypto. Wow. How beautiful was this? This is what it's all about. You know? This is what it's all about, really. This is what it's all about. It's what it's all fucking about. Okay, now so now we understand the importance of genius. No, not clarity. This is genius. Genius already passed. They basically said this is what you have to do to make it legal to mint a stablecoin in the US. Now the moment you've all been waiting for. Not great. Not great. Plus 2.7% 30 days. Clarity Act allows banks to get involved. Okay, cool. Out of ATH, I guess. 13.315 billion. We have to 100 exit. All roads lead to crypto. Everything leads to crypto. All roads lead to crypto. Stablecoin issuers swapping long-dated bonds to keep rates down, stimulate the United States economy, and send Bitcoin to many, many, many millions of dollars. Wow. Wow. How about that for a fucking thesis, Starlink? Star-Lord, is it Star-Lord? I call him Starlink. Star-Lord 75. How about that, huh? Huh? How about that for I'm doing I like the stream? How about that? How about them? How about them apples? Huh?
Do you like apples?
Yeah.
Well, I got a number. How do you like them apples?
Wow. Wow. After 6 years in crypto, I understand stablecoins. How about them apples, huh? How about them apples, ladies and gentlemen? That was the stream today, Tuesday, March 17th, 2026. Every day we fucking bang. We make it happen. We make shit shake. This is what we do every single day. If you like the stream, you're going to like it more every single day because this is what the fuck we do. We pull up. We make shit shake. We make shit happen. This is what we do every day. Some new shit, some cool shit, some blue shit, whatever. It's what we do. Money blue, money green. Happy St. Patrick's Day. It's a holiday. It's a national one. Be good. Be great. I love you all. See you tomorrow. Same time, 3:30 p.m. BST every single day. I'll catch you when I catch you. I'll see you when I see you. Have a great rest of the day, motherfuckers. Peace.